is a long process. So we're seeing progress. They still have a long way to go, but they understand that the manufacturing base being so concentrated in China is not going to be good for business, especially in the current geopolitical environment. So they are making progress, but at the same time, they're exposed. So I don't know what they're going to say, but I think their actions speak to further diversification away from China being the major hub.
David, it's really tricky to understand how to value Apple when the core hardware business is not seeing growth, and yet the multiple is quite elevated. Now, I understand there's been a shift towards services and higher margin businesses, but how do you explain to people how this company should be valued?
How it should be valued is outside of my expertise, but this is how I look at it. It is a very stable company. They have iPhone that are very sticky, and every 3 or 4 years, you're going to see their customers upgrade. Their market share isn't very high from a global perspective, so there are many opportunities for them to grow in emerging markets and continue to pick up share. And the prices or the rollout and also the iPhone features that they have, it's very abundant. There are many price levels, and they can continue to sell more phones at higher prices in emerging markets. And I do expect their revenue growth to continue. And it's not just about iPhones too. Like this year, they're going to have iPhone SE, they're going to have Mac, they're going to have an iPad refresh. So every year with new products in this iOS ecosystem, they're going to continue to grow revenue. And you mentioned services as well. That's a high profit, high margin business.
Those numbers drop a little bit later. David, appreciate your time. David Choi there of S&P Global Ratings. In the next hour of Bloomberg Surveillance, Mike Wilson of Morgan Stanley will catch up with the Cato Institute, Stefan Slowinski of BNP Paribas, and the former St. Louis Fed president. All of that and more just around the corner. From New York, the second hour of Bloomberg Surveillance, up next.
Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so.
They're going to react to see how fiscal policy ends up playing out. And they're in a wait-and-see mode.
The policy risks that they're facing from tariffs and immigration and fiscal policies are immense here.
What the Fed can't do is they can't front-run policy. Until we know the sequence of policy, the magnitude of policy, the Fed can't front-run that.
How is the Fed going to manage through this environment of heightened policy uncertainty? There's no real good answers for that.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now with Apple earnings coming after the closing bell. We get a bit of the economic data in about 1 hour and 30 minutes, 90 minutes away. You get jobless claims in America. Before that, an ECB rate decision. So a fairly stacked day ahead for financial markets.
When it comes to both central banks as well as economic data and earnings, my focus is very much on earnings right now because it signals a shift that we have seen increasingly in the AI cycle and, frankly, in the dispersion between the winners and the losers and why the reactions in markets have been the way they have.
It's interesting that we have some faith in some outlooks and no faith in others. GM puts out a decent outlook, gets sold. The Bank of Canada doesn't provide one, it's worried about tariffs. Chairman Powell can't really offer one much right now either. Then Tesla comes out and says it's going to be a pretty epic year ahead, and this market laps it up.
So it's a stock-picking market, and this is a storytelling market. And the story that people want to hear is that AI adoption is here, that we're all going to work efficiently and better and have better lives because of how much AI is really adding to what we do every day. And they don't want to hear about huge data centers. They don't want to hear about energy, and they don't want to hear about the nuts and bolts of either Caterpillar or UPS getting packages to places or potentially even building the cars that we're even talking about with some of these businesses.
UPS right now in the pre-market down by 10% following earnings from them. Broadly, equity futures doing okay, positive by 0.2%. We begin this morning with our top story. A regional American Airlines flight colliding with a military helicopter near Reagan National Airport. The plane carrying 64 people, the helicopter carrying 3. The Transportation Secretary, Sean Duffy, only sworn in on Tuesday, offering full cooperation.
We want to extend our thoughts and prayers to those individuals who were impacted by the events tonight. I spoke with President Trump and his team in the Situation Room. I had a conversation with Secretary Pete Hegseth as well, and then with the Kansas delegation and the mayor and others in leadership, as well as Governor Youngkin from Virginia and Governor Kelly from Kansas. From the Department of Transportation and FAA's perspective, we are going to offer full support to those on the ground, to the mayor, but also to the NTSB, who is going to be conducting the investigation in this matter.
The crash prompting a search and rescue operation for any survivors in the Potomac River, with an investigation into the cause still underway. The American Airlines CEO, Robert Isom, weighing in.
We are actively working with local, state, and federal authorities on emergency response efforts, and the American Airlines care team has been activated to assist our passengers and their families. We're cooperating fully with the National Transportation Safety Board in its investigation and will continue to provide all the information we can.
A news conference taking place at 7:30 local time. That is 26 minutes away. Joining us on the ground, Bloomberg's Anne-Marie from Reagan National Airport. Anne-Marie, welcome back to the program. About 60 minutes since we last caught up. What's the update?
Well, Jonathan, NBC Local News is reporting that actually now more than 30 bodies have been recovered. We do still have the search and rescue mission at play here in the Potomac River just behind me following this fatal crash last night around 9 p.m. right here at DCA. So there's still a tremendous amount of uncertainty and a ton of questions that still need to be answered this morning. You know, you listen to airline experts, and a lot of questions they're starting to bring to the forefront is, what was the communication like between these two aircrafts, and what was the communication like between those aircrafts and the air traffic control? It's a very difficult situation right now, and hopefully in less than 30 minutes time, when the mayor of DC leads this press briefing, we'll get some more answers.
Imre, can you just paint the scene in terms of DCA being one of the most congested airports in the country, given that you do have low-flying helicopters and a lot of traffic going right to close to downtown Washington, D.C.? Is there a sense of what kind of staffing there is, what kind of air traffic control, and whether there have been other incidents like this that have raised concern in the past?
Well, this has been a hot topic in D.C. for years, and when they got through that last FAA reauthorization last year, part of that, more money to the FAA, more money to the NTSB to make sure that there's more air traffic controllers, make sure that there's upgrade of the industry, of the aviation industry, modernization of these airports. In lieu of that, actually 5 flight paths were added to this airport, and that had a lot of concern with a lot of the local senators in Maryland and Virginia and representatives, because this is an airport that is over capacity. Not just the airport itself, but as you alluded to, Lisa, we are just south of the Pentagon. This is where you see a tremendous amount of military aircrafts fly. You also have dignitaries using this airspace that sometimes go under the radar, and something like last night when we heard from the new Defense Secretary, Pete Hegseth, that this was a training Black Hawk with those 3 U.S. military personnel on it. So this is an airport, even though it's very tiny, the airspace and the airport is definitely oversubscribed. And we heard from Senator Jerry Moran last night of Kansas, of course, representing the state where this flight originated from in Wichita. And he was talking about how this is so personal to him, not just because, of course, he's representing constituents and he was just absolutely heartbroken and devastated yesterday, but he personally lobbied American Air to bring that flight here to Washington, D.C. That flight was only 1 year happening, and he's been on that flight. So that is the scene of what DCA is like and why it is such a difficult airport to really operate and control, because this airspace is oversubscribed.
Anne-Marie, just before you go, we're getting pictures of the search and rescue effort. Could you share with us the conditions on the ground, how difficult things actually are?
It's incredibly difficult, especially given the fact that last week we had really unprecedented weather in Washington, D.C. You remember the inauguration was moved inside because of that. So there was ice on the top of this river. It's not a very deep river, but it is very muddy, and that ice is just making this even more difficult for these divers and these search and rescue mission professionals. What we do know is that the helicopter was found upside down. Reports last night that it was just bopping around, so really making it even more difficult for these individuals to really try to understand where these bodies are and what kind of conditions these aircrafts are in. And then the plane itself was split in 2. So this is an incredibly difficult situation for these individuals who have been working since this crash happened at 9 p.m. last night.
Anne-Marie, stay close. We'll catch up with you later this hour. That news conference taking place at 7:30 local time. That is about 22 minutes away. Lisa, plenty of questions. I'm not sure how many answers they can provide.
Well, let's see at 7:30. I just am really, my heart goes out to all the families, because that is just tragic. A lot of young people on that plane, and we will wait to hear some of the answers to those questions.
I think we all share that sentiment. Just to repeat that, 7:30 Eastern time for that news conference to take place about 20 minutes from now. For those of you just joining us, looking at the markets, equity futures doing okay. We begin this hour with stocks relatively higher as we get results from both Meta and a bullish outlook from Tesla supporting equities. Mike Wilson of Morgan Stanley saying in the near term, the best outcome for equities is that rates continue to decline. In the longer term, the best outcome for stocks is a re-acceleration in earnings growth and macro indicators. Mike joins us now for more. Mike, good morning to you, sir.
Good morning.
Let's try and put those 2 points together, shall we? yields need to come down, the why is important, but in the longer term, we need economic growth to perform as well and for earnings to reaccelerate. Does that come with higher interest rates, with higher yields, with higher term premium?
Well, this is the game. I mean, 450 is, we're right at it right now as we speak, which is kind of interesting. I mean, that's the kind of line in the sand where, if rates go higher, even if growth is better, that's going to restrain multiples. So what we really need is that sort of that sweet spot between 4.5, where growth is not falling off a cliff. The Fed is doing their thing. It's, I think people are talking about, the Fed's not cutting. Well, they cut 100 basis points and back-end rates went up. So I'm not so sure that pausing is really all that bad for stocks in the short term. And now, of course, we're in earnings season, right? So it's all about idiosyncratic behavior in the short term.
Well, you say earnings, they need to show, they need to deliver. What does that mean at a time where storytelling is so important? And it's not just the actual numbers, it's what you say about them, your tone, how many exclamation points you use.
Well, it's show me time, right? So there has been a lot of storytelling going on. And I think we're seeing a separation of the winners and losers, even last night, right? And that's good. I mean, that creates opportunity for stock picking. And like one theme we've had is sort of the adopters versus the enablers within AI. And very simplistically, don't want to oversimplify it, but that's basically software over semiconductors. And that's been working not just since Monday. That's been working for 3 to 6 months. So as usual, the market's gotten ahead of it. There's going to be themes, I think, new themes that pop up this year, and that's really our job.
Has that pivot happened? Can you say that essentially the tipping point, at least in the market zeitgeist, was on Monday, where really the adopters are now going to absolutely rip, while the NVIDIAs and the Microsofts, the enablers, are going to take a leg behind?
Well, like I said, it's already happened. So the question is does it persist? What we're really excited about is not even that trade, but like, when does the technology get diffused into the broader economy? That's the true broadening out story, where you can get small mid-cap companies performing. We're not there yet, okay, because we don't have the solutions, right? That's what the application layer is, where the solutions are going to be built on the compute platforms. So that could take a year or two, you know what I'm saying? Now, markets will get ahead of that, but in our view, that's really a second half story or a 26, 27 story. So that's why our view on the index has been, we're probably going to be choppy here for the next 3 to 6 months. A lot of announcements coming out, Fed's on pause, still about uncertainty around, the implication of these policies, both globally and domestically. So we'll take a break here.
This is curious to me. Tesla actually warned about the potential for tariffs and the potential for that to hamper some of their revenues. Didn't seem to dent their stock at all.
Yeah.
GM talked about it. That was it. I mean, they basically delivered. They had the forecast, but their shares tanked. What did you learn from that?
Well, it confirmed what we already knew, which is the retail community is very active right now, very active. And we see it in our data, and they just love these stocks. Tesla, you can name a bunch of stocks that they just buy every day. Not because they're dumb or they don't know what they're doing. It's just they're buying into these themes, and then of course that creates demand from institutional investors too. So I don't think it teaches anything new last night. That's a continuation of something that's been going on for 6 months.
But these are themes you would say don't fight, because the tailwinds behind them, at least the buying behind them, is that powerful.
It's very consistent. I mean, you come in every day and the same names are kind of swooped up, and I don't see that changing unless there's a real kind of event. So if rates were to go to 5%, I think that would change, okay? If we were to get, some sort of an indication that, oh my goodness, unemployment's going up again and the recession risk come back onto the table, or there's an international event, a geopolitical event, something like that. But in the absence of something, a real gross shock, I don't see the demand for those types of stocks waning in the short term.
What if a Chinese AI lab comes out and says we can do something that you've spent billions on for $5 million?
Right. So what happened is some stocks got punished, and then the money moved back into the kind of fan favorites. And look, this is the theme for 2025. I think this is a good thing. We're going to see this capital concentration. Right, that money can now go to other places. Right, so financials have done extremely well. That's a new area where there seems to be a perpetual bid. Software is a new area. Consumer services have done extremely well. And then even areas like media and entertainment. Those have been our 4 sectors that have shown the relative earnings revision breadth. There's some thematics in there as well, and we think that probably continues.
Just to broaden out, and I understand it's a stock picker's market, but do you think that you've seen enough to say that the equal weight will significantly outperform the market cap weight S&P 500 this year?
Not yet, and I want to caveat this because typically when you go from a period of market cap outperformance, market cap weighted outperformance, you usually get the relative outperformance in a down tape. Right, so if you get the S&P market cap weighted to go down, then you can see that spreading of wealth, if you will, to other areas. And I don't want to compare this to 2000 completely, but that's the most similar period. In 2000, we had a lot of these tech stocks came off, and the S&P equal weight was basically flat. A lot of indices were, a lot of sub-indices were actually up. So that's what we're looking for. I think in the first half of this year is the best chance that I can say that could happen, since 2022. I like to bring this up to people. 2022, right? Everybody, thinks it was a terrible year for the market. A lot of stocks were up in 2022. That was the best breath that we had. So it's a similar setup where I don't think the market's going down 25%, but the point is, if the index can give it up, then that capital can allocate to other areas.
The Russell right now up by 0.9% on the small caps. Mike, good to see you.
Good to see
you. As
you.
always, thank you, buddy. Mike Wilson there of Morgan Stanley with an update on stories elsewhere with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Washington, D.C.'s Reagan National Airport is closed until at least 11 a.m. this morning after an American Airlines plane collided with a military helicopter last night. There were 60 passengers and 4 crew on board the plane and 3 airmen aboard the helicopter. NBC News reporting at least 30 bodies have been recovered from the icy Potomac River. Elsewhere, Caterpillar shares are trading lower 3 1/3% in the pre-market trade. Fourth quarter earnings beat analyst estimates, but Caterpillar warned that sales and revenue will be slightly lower in 2025. Of course, the picture could change quickly for all global manufacturers given expected tariffs from President Trump. SoftBank is said to be in talks to invest as much as $25 billion in OpenAI. People familiar say that this would be on top of the $15 billion that CEO Masayoshi Son has already committed to the American Stargate AI infrastructure venture. The move would potentially make SoftBank OpenAI's biggest backer. OpenAI, for its part, declined to comment. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, tariffs incoming.
We are your biggest trading partner. Show us the respect. Shut your border. This is a separate tariff to create action from Mexico and action from Canada. And as far as I know, they are acting swiftly.
The deadline fast approaching this weekend. The coverage up next.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Equity futures on the S&P positive here by 0.1%. Bond yields moving lower. We're down 3 basis points. The 10-year 4.4941. Under surveillance this morning, tariffs incoming.
We are your biggest trading partner. Show us the respect. Shut your border. This is a separate tariff to create action from Mexico and action from Canada. And as far as I know, they are acting swiftly. And if they execute it, there will be no tariff. And if they don't, then there will be.
So here's the latest. Commerce Secretary nominee Howard Lutnick defending President Trump's proposed tariffs on Canada, Mexico and China before they're set to go into effect on Saturday. Joining us now to discuss is Scott Lincecum of the Cato Institute. Scott, welcome to the program, sir. The threat of tariffs, even if they don't implement them, just the threat, what's the price we all have to pay?
Well, the price we pay is with uncertainty. When you have Trump tweeting about tariff threats and then Prime Minister Trudeau responding with his potential retaliation, that affects the real economy. Fed economists back during our last Trump period saw that investment was reduced by tens of billions of dollars because trade policy uncertainty was the highest it's ever been in any administration dating back to the 1960s. So that means a little less output, fewer jobs, less growth overall.
This is a reason why people haven't really been buying into the GM story or some of the auto manufacturers that are heavily dependent on Mexico because they do expect this to persist. Is it going to be incredibly bifurcated this time around, given that there are specific countries that are being targeted and specific products, or is this going to be more wholesale than it was last time around in 2018?
Well, it depends on who you ask. There have been reports that the Trump administration is looking at more targeted tariffs at sectors like autos or security-related sectors or semiconductors. On the other hand, you have Donald Trump saying that he wants a global tariff, and he repeated those claims just a couple days ago, while at the same time he's posting on Truth Social about Colombia or Canada or Mexico or China. So it's really hard, I think, to get a real handle on where the administration intends to go. Right now, it seems they just have a dictionary of options, and they're letting the president trial balloon a lot of it.
In the meantime, Scott, you say the implications so far from policies have to do with potentially a growth shock negatively because of some of the uncertainty. What are your other presiding assumptions based on what we do know? I know there's still a lot of questions to be no, but what we do know so far about the Trump administration's plans.
Yeah, I mean, beyond the uncertainty, I think we can guarantee some level of new tariffs in the next, say, 6 months or so. It gets a lot murkier again when we talk about what kind. My base case is some sort of increase on tariffs from China due to their failures to implement Trump's phase 1 deal from his previous term. The Canada and Mexico situation, I'd be amazed if we're really putting tariffs on avocados right before the Super Bowl or blowing up the North American supply chain. Instead, though, I think you could see core components of autos, whether it's batteries or engines or looking at the USMCA rules of origin with respect to how autos are manufactured here and in Canada and Mexico. And then metals, steel and aluminum, I think, are another big area because Trump removed those national security tariffs back in 2019 because the Canadians and Mexicans retaliated. But then imports have surged, and the steel industry is complaining about those, saying it's a backdoor to Chinese steel. So I think we could see something there, too.
So, Scott, before you go, we've got to talk about food. You mentioned avocados. You're fantastic at this. You know I follow your work. How do we make food prices cheaper? What can they actually do? What levers do the government have?
Well, the big one is tariffs. We still impose a lot of tariffs and anti-dumping duties and other restrictions on the importation of safe foods from around the world. And we're trying to add even more, and not just from Donald Trump, but from our trade remedies regime. Lowering those could give us a nice little decline, or at least slow food price inflation. Another area is renewable energy. We spend billions and billions of dollars subsidizing biofuels. That's basically putting food into our gas tanks and other things. And that's been shown again to increase food prices. Now that's not going to stop eggs from being really expensive or anything like that, but it could give us a little break at the grocery store. And unfortunately, though, those are very politically popular things I just mentioned. And I think the chances of actually getting that kind of real relief are pretty slim.
Hey, Scott, appreciate your input. As always, Scott Lincecum there of Cato Institute on what we can do to maybe make things a little bit cheaper, but obviously what we won't do anytime soon.
I love the idea, too, that they're not going to necessarily put tariffs on Mexican avocados right before the Super Bowl, and it just sort of speaks to some of the controls out there. I do think it's notable what he's saying about slower growth as a result of some of the uncertainty and how that's being factored into certain sectors, given that this is going to be an ongoing threat.
There's a price for the uncertainty. There might be a benefit too. We talked about the front loading of orders, the bringing forward of orders that we could see over the next few months of people worried about tariffs on particular goods.
There's some really big questions, and it doesn't just have to do with tariffs. We haven't spent as much time talking about immigration, but this is actually what economists are really looking at as well, which is there has been this sort of immigration shock, labor shock to the supply side that has offset some of the potential inflationary aspects of the recovery. Does that shift? So far, not clear. A lot of signaling, but not necessarily you're seeing the same kind of carry through.
Yeah, please you brought that up, because I think a lot of people, a lot of economists believe that this Federal Reserve was bailed out by a big supply side shock, which was very loose immigration from the previous administration, which enabled the labour market to rebalance and ultimately allowed this economy to grow without having the inflationary impulse that we otherwise would have had. And that the disinflation we saw as a consequence of that was less about the interest rate hikes from the Federal Reserve.
Much more about the fact that you had a supply of workers that were accepting relatively low wages relative to what people had in the market. If that stops, does that become an inflationary headwind? These are some of the things people are talking about. It goes to the idea that, yes, there's uncertainty with respect to Trump policy, but there's uncertainty as to where we are and how we got here to begin with, and whether we'll start to see some of the drift off of some of those trends.
If you are just joining us, of course, welcome to the programme. I'm sure many of you are aware our top story across this nation this morning, a regional jet flown from American Airlines colliding in a deadly mid-air crash with a military helicopter late last night on the approach into Reagan National Airport in Washington, D.C. In about 4 minutes' time, a news conference that will be heard across this nation from Washington, D.C. with the Mayor of Washington. That is just around the corner. We'll bring it to you live in Washington in just a moment.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Moments from now, a news conference in the nation's capital in Washington, D.C., led by Mayor Bowser in Washington, off the back of the deadly crash taking place overnight. When that begins, we'll bring it to you. With equity futures right now on the S&P 500 stateside, your market looks like this. Just about positive on the S&P by 1/10%. With some morning movers, here's Manus Cranny. Morning, Manus.
Jonathan, good morning. It is all about the coagulation around big tech. And I kick it off with Meta, up 1 1/8. You've just been promised a really big year. A record fourth quarter, but no full year guidance. Revenue growth this quarter is going to be the lowest in 2 years. And the promise is that they will deliver a return on equity on $60 to $65 billion worth of CapEx. I get the sense this is a market that's really trying to justify this kind of CapEx relative to those kind of numbers. The question you need to ask, and I think it's a lovely line from one of the analysts this morning, AI spending, does it look bloated or is it visionary? Roll it over, have a look at UPS. We know there's a bifurcated economy out there, but what is the slowdown in core parcel business at UPS telling you about the US economy? Nobody's calling for a dramatic slowdown, but this is a global canary in terms of stagnant demand and parcel shipments. This company's already in remedial action, Jonathan. They've already closed 45 centers. It's a question of how do you shift the narrative within a business which is perhaps bloated. And that takes us to pharmacy benefit manager Cigna, stock down nearly 10%. They've tried to set a floor in terms of what they will earn this year, $29.50. But they offer a product, think of it this way, it's a stop loss. You're a big employer, you got costs of healthcare, and then if it triggers over a certain ceiling, they step in and they cover the cost. That is bruising to them at the moment. This is where they've got to do remedial action. And also the actual loss, the loss ratio that we look at within Cigna, it's called the medical loss ratio, and that is rising above estimates, almost 88%. Quite a dramatic turnaround because, again, this is about control over costs and product. It's global. Jonathan.
Manus Cranny, thank you, sir. Appreciate it. Some of the movers to look out for this morning. Our top story across this nation, though, a regional American Airlines flight colliding with a military helicopter overnight near Reagan National Airport. The plane carrying 64 people, the helicopter carrying 3. NBC News reporting earlier this morning that 30 bodies have been recovered. Any moment from now, we'll have a news conference in Washington, D.C., led by Mayor Bowser. When it begins, we'll head over to it. Joining us now here in New York, one of our aviation experts, Bloomberg's Sid Phillip, joins us for more. Sid, good morning to you, sir.
Morning, John.
Your early take on what's happened overnight?
At the moment, it's still early to say what really went on and what, because the American Airlines plane was in the process of landing. It was in their short final approach to DCA. And essentially, it's still early days to see what happened. I mean, we're going to have to see what the NTSB comes out with in terms of why the helicopter was in where it was, because the aircraft was in position to land, and that was basically where it was.
There are a lot of questions about air traffic control and just what has gone on since the pandemic in terms of a lack of staffing or training and some of the close calls that we keep hearing about. Where are we in our understanding of how understaffed and what some of the issues are within the Federal Administration of Aviation?
Yes, so this is the first major deadly aviation incident in the U.S. Since 2009, and so this is, I mean, there's been a series of near misses, and the government the previous administration talked about the need to hire more air traffic controllers, and that's really where the previous administration was talking about how they need to modernize ATC and how staffing at the FAA was below where they wanted it to be. And so I think for the new incoming administration, they're going to have to examine where those plans to hire, because it takes a long time to hire air traffic controllers, train them up, and make sure that they're ready for the job, and that's where they're going to have to sort of work on it.
That's where I was going to go. If this is a known problem, what has been the obstacle in remedying it? So I think we've been talking about this for years, right, John?
And hopefully we get some answers in just a moment. That news conference begins right now.
Good morning. I'm Muriel Bowser. I'm the mayor of Washington, D.C. We are here at Reagan National Airport to provide an update on the tragic events of last night. I'm joined by U.S. Transportation Secretary Sean Duffy, D.C. Fire and EMS Chief John Donnelly, American Airlines CEO Robert Eisen, the MWA, the Metropolitan Washington Airports Authority CEO Jack Carter, United States Senator Mark Warner, United States Senator Tim Kaine, U.S. Representative Don Beyer, as well as the Chief of the Metropolitan Police Department, Pamela Smith. And we are joined by first responders from across the Metropolitan Washington region. I speak for all of us when I say, and certainly all Washingtonians, how very sad we are for American Airlines, for the United States Department of Defense, and for all Americans for the loss of life that happened with the collision of these aircrafts. We know that includes families from across our region as well as in Kansas and across the country. This morning we all share in a profound sense of grief. I do want to thank the first responders who acted quickly last night, who ran towards danger, went into a very frigid river, and have worked throughout the night. Chief Donnelly reported in last night's briefing that we have a strong mutual aid agreement in our region, and those teams have worked together throughout the night in really tough and heartbreaking conditions, and we should all thank them for their heroic efforts. So we'll have several updates today. I'm first going to turn to the Secretary of Transportation, Sean Duffy, and then you will hear directly from Chief John Donnelly with a situational update.
Thank you, Mayor. Again, Sean Duffy here, Secretary of Transportation. We wish we were gathering for different purposes today. I just want to let you know that the Department of Transportation, the FAA, along with the White House, President Trump, local, state, and federal partners all working together on this incident in unison. I couldn't be prouder of this team that's been assembled, working tirelessly. Mayor, I want to thank you specifically for your work. A few details I'd like to give all of you, and some of you reported this, but last night, if you live in the D.C. area, you would know that this was a clear night last night. The helicopter was in a standard pattern. If you live in the D.C. area, you'll see helicopters up and down the river. This flight pattern is seen oftentimes when you live in D.C. This was a standard flight pattern last night as well. The American airline flight coming into land was in a standard flight pattern as it was coming into DCA. So this was not unusual with a military aircraft flying the river and aircraft landing at DCA. And again, if you live in the area, you'll see that frequently with those two aircraft working together. As many of you have reported, we have located the two aircrafts. The fuselage of the American airline plane was inverted. It's been located in 3 different sections. It's in about waist deep water, so that recovery is going to go on today as that recovery takes place of the fuselage of the aircraft. NTSB is going to start to analyze that aircraft, partner with the FAA with all of the information we have to get the best results possible for the American people. I would just say that safety is our expectation. Everyone who flies in American skies expects that we fly safely, that when you depart an airport, you get to your destination. That didn't happen last night. And I know that President Trump, his administration, the FAA, the DOT, we will not rest until we have answers for the families and for the flying public. You should be assured that when you fly, you're safe. Thank you.
Thank you, Secretary. Thank you, Mayor. I'm joined today with Fire Chief Bonnet from the Metropolitan Washington Airports Authority, and I'm John Donnelly, Chief of the District of Columbia Fire and EMS Department. Last night at 8:48, the control tower sounded an alert, which alerts responders to respond to a report of an aircraft crash on or near the airport. That sets off an immediate response from the Airport Authority Fire Department, from the District of Columbia and Metropolitan Harbor Patrol fireboats and other fireboats on the river in order to support that type of operation. Very quickly, this call escalated. It became apparent, the responders realized that they had a plane crash and immediately escalated to a response that ultimately included about 300 people last night. These responders found extremely frigid conditions. They found heavy wind. They found ice on the water, and they're operated all night in those conditions. I'd like to take a moment to acknowledge the agencies that responded in addition to DC Fire and EMS and the Metropolitan Washington Airports Authority. Montgomery County Fire Department, the Prince George's County Fire Department, the Charles County Fire Department, the Baltimore County Police Department, the Anne Arundel County Fire Department, the Alexandria Fire Department, the Arlington County Fire Department, the Fairfax Fire Department, the Prince William Fire Department, the Baltimore City Police Department, the Maryland State Police, the Maryland Natural Resources Police, the Department of Defense, the Joint Base in Bowling Fire Department, and the staff there, the U.S. Army, the U.S. Coast Guard, the United States Park Police, the Metropolitan Police Department, the FBI, and the NTSB. Despite all those efforts, we are now at a point where we are switching from a rescue operation to a recovery operation. At this point, we don't believe there are any survivors from this accident, and we have recovered 27 people from the plane and 1 from the helicopter. The District Office of the Medical Examiner has lead on reuniting these bodies and these people with their loved ones, and we will continue to work to find all the bodies and collect them and reunite them with their loved ones. We should also acknowledge that the Virginia Medical Examiner and the Army Medical Examiner are involved in this operation and a very important part of getting people identified. So.
Our hearts are certainly with all of the crew in American Airlines, and we'll hear from CEO Isom.
Thank you, Mayor. Good morning. I'm Robert Isom, the CEO of American Airlines. I want to express my sincere condolences for the accident that happened at DCA last night. We're absolutely heartbroken for the family and loved ones of the passengers and crew members, and also for those that were on the military aircraft. Our focus right now is doing everything that we can to support all of those involved and also the PSA Airlines team. This is devastating. We are all hurting incredibly. We urge any family and friends looking for information about their loved ones to call our designated helpline, and that's at 1-800-679-8215, 1-800-679-8215. And here's what I can share at this early stage. American Eagle Flight 5342, operated by PSA Airlines, traveling from Wichita, Kansas to Reagan National Airport was involved in an accident just before 9 p.m. local time on final approach into Reagan National. It collided with a military aircraft on an otherwise normal approach. And at this time, we don't know why the military aircraft came into the path of the PSA aircraft. Flight 5342, a CRJ-700, was under the command of 4 crew members. They carried 60 passengers, as you know, for a total of 64 people on board. In addition to local resources already here in D.C., American Airlines has activated our care team, and that's a group of specialists that are trained to support these types of responses. These team members are on site or arriving soon. And additionally, we have members of our GO team that are on ground here in D.C., and they're being deployed with resources to do everything that we can to take care of the needs of the families and the loved ones of the passengers and crew members. And that is our sole focus. And we're so grateful for the first responders. They've been working through the night, courageous efforts. And we're actively working with local, state, and federal authorities on emergency response efforts and closely coordinating with PSA Airlines as they cooperate fully with the NTSB on the investigation. I know that there are many questions at this early stage. I just won't be able to answer many, but we'll provide additional information as it comes. Thank you.
I want to introduce the Metropolitan Washington Airports Authority CEO, Jack Potter. The authority manages Reagan Washington National and Dulles International.
Good morning and thank you, Mayor. First, let me begin by expressing our condolences for all the victims of this flight and for their families. There's a lot of grieving going on, and so we're very sympathetic to that. I want to echo what was said about the first responders. When there's a problem in this area, everybody drops everything and they rush to wherever the problem is. So I want to thank the chief, the entire team from Washington, D.C., but just as important, the list of folks that the chief described. The federal authorities have been here en masse, and so a lot of effort was brought to bear. Unfortunately, we weren't able to rescue anyone, but we are in the recovery mode right now. And I just want to, last night I expressed the fact that we hope to open at 11 o'clock today, and that is still the case. We're going to open the airport at 11 o'clock. And again, condolences to the families, and thanks to the many, many who are still out there working very, very hard to complete this recovery. Thank you, ma'am.
I do want to acknowledge that the Virginia Transportation Secretary is here, in addition to the Alexandria Mayor. And I will like to ask members of the Virginia congressional delegation to the podium next. U.S. Senator Mark Warner, followed by Tim Kaine and Representative Don Beyer.
Thank you, Mayor. I want to join with everyone else and express my condolences for the victims. For folks who don't live in the DMV, we are made up of a lot of jurisdictions. Reagan Airport's in Virginia. Across the river we have Maryland, obviously the district, but has been indicated by the chief, when tragedy happens, all those distinctions between the various jurisdictions and our federal partners all disappear. And I want to again thank all the first responders. On a personal note, I'll just add that literally I now know I was coming back from the district from a dinner to my home in Old Town Alexandria. And while I did not see the collision, I wondered, I'd never seen this many red lights streaming towards the airport and across the river in Maryland about this time. My phone started blowing up and I realized that this accident had taken place. There'll be a time to figure out, I know NTSB will have a briefing later in the day, but to the victims, our condolences. To the first responders, our thanks. sorrow, thanks, and questions. So sorrow, as all have expressed, to the crew, to the passengers, to the soldiers, to their families, to their friends, to their loved ones, to people who are still trying to get information and unsure whether their loved ones have been lost. We offer our profound condolences to them and our sorrow for this tragedy. Thanks, I'll echo, Mayor, what you began with. When you see a challenge like this and you see people from so many different agencies, local, state, federal, with different uniforms, different badges, but working in such a coordinated way, even in the midst of a tragedy, it does give you a sense of appreciation and pride in people's willingness to come to the danger and work together. And I started to see that as a local official 30 years ago in Richmond, and definitely have seen it here. And then finally, questions. There are going to be a lot of questions, obviously, a lot of questions. And that's what the NTSB's job is to be an independent investigator of incidents like this. And they are here. We were in dialogue with them earlier today. They've been here since they got the alert, and they will be doing the work and playing lead in answering the many questions that we have. And that's as it should be. It's not a time to speculate. It's a time to investigate and get answers to the questions we need. And I have confidence that will be done. Thank you.
Following up on the Senator, I think grief, thanks, and service, with millions and millions of Americans traveling every year, we are all grieving, knowing that it could have been our loved ones, it could have been us, and our hearts go out to all those who have lost folks. In a most partisan place, also, I'm really thankful that Democrats and Republicans, people from all over, have come together to try to make sure that people are served. As a local representative, I want the families to know that our office is available to serve you in any way we possibly can through this time of grief and transition and loss. And then also just note that we're deeply grateful for the people who risked their lives last night on a moment's notice and spent the whole night on the river in the ice and the wind, serving us. And then finally, as Senator Kane, Senator Warner noted, after the NTSB investigation, we've got to make sure that at the federal level and with the support of Virginia, Maryland, D.C., we're doing everything we can to make sure this does not happen again.
So with that, it's been said already that the National Transportation Safety Board becomes the lead agency in the investigation. Our jurisdiction in D.C., where the crash occurred over the river, concludes as we, in the leadership role of the Unified Command, as we shift to a recovery effort. We expect the National Transportation Safety Board to provide briefings to the press later in the day. So at this point, we can take a few questions. Yes?
Can you say without a shadow of a doubt that people are safe to fly?
What we can talk about today is what happened here with the collision of these vehicles. We said what we know, and that the National Transportation Safety Board continues to investigate. I don't know that any of us have been briefed on anything that would suggest any other aircraft are implicated. Yes?
You're still missing 30 plus people in the water. What are some of the challenges in recovering them right now?
Chief.
So the rescue operation, or the recovery operation, goes on. It's a lot of touch and feel in the different parts of the plane or in the helicopter, and the crash area is a little spread out, so we've got some work to do. And I think it's a pretty normal type of situation. I don't think it's extraordinary.
How spread out is this debris field?
So the wind started blowing last night, so we've had debris travel from the airport down as far as the Wilson Bridge.
Mile-wise, how far is that?
I couldn't tell you.
Okay.
Less than a mile.
This is a question for CEO Carter. You're going to open the airport at 11 o'clock this morning. How are you going to do that? And what impact is that going to have on operations, on passengers, on people's anxiety? How are we going to do this?
Well, we're going to open the airport at 11 o'clock. It's safe. We've worked with all the federal agencies, FAA, And, you know, it's been determined that we can open that airport safely. The recovery effort that's on our property is on the waterfront. Our primary runway, 119, will be open. It's away from any activity. We're going to have a secure area around that, so all are comfortable that we can get back to operations. Now, each airline will announce or communicate to their passengers what their operations are going to be. Obviously, their networks were disrupted overnight, and so we might have a slow recovery, but the bottom line is we will begin to have aircraft move in and out of this airport at 11 o'clock.
Okay, so 1, 2, 3.
Has the flight recorder been recovered, the black box at all?
I don't think we can say anything about what's in NTSB's purview.
You mentioned the airport opens 3 hours from now. There's a lot of helicopter traffic from the military, U.S. Park Police, and all that. Will helicopters be flying right through here as well, beyond the recovery efforts?
I don't know the answer to that. Jack, do you have anything to add? We don't have anything to add about that. Yes.
For Secretary Duffy, can you reassure Americans that the U.S. still has the safest airspace in the world?
So the question is, can I guarantee the American flying public that the United States has the most safe and secure airspace in the world? And the answer to that is absolutely, yes, we do. We have early indicators of what happened here, and I will tell you with complete confidence, we have the safest airspace in the world.
When it comes to informing these families who tragically lost their loved ones, what has that looked like so far? Have any of them been informed? The flight manifest, is there any details you can provide on that front?
All I can say is that we have published the 1-800 number. We have family assistance centers set up here in DCA. We do in Wichita as well. I'm not at liberty to give the number of families that have been that have used those services, but we are making that use. We have over 100 team members that are either here or on their way that are specially trained to work with family members, handle travel arrangements, hotel arrangements, incidentals, to make sure that we're taking care of people in any way that they can, as you know, as our teams are hurting and suffering, as our passengers and their families need assistance. We're doing everything we can. I don't have any more information on that right now.
Mayor, you're next. Chief Donnelly, can I ask you to describe the next phase of the investigation? How confident are you that you'll be able to recover all 67 of these bodies? And can you speak to some of the debris that's also being pulled out of the river? We understand there are some suitcases, some other things that have been pulled out from the river. And I would like to ask anyone here, perhaps the Transportation Secretary or Mr. Eisen, if we know anything about these victims, age ranges, nationalities, anything of that nature.
So the next phase of this operation is going to be led by the NTSB. All of us are working together, though, to search the area and find the victims. I'm confident that we will do that, and that will take us a little bit of time, though. It may involve some more equipment. As far as the things being collected, I don't have personal knowledge. I know that we have been collecting debris that you would expect to see from a plane.
And anything about the victims?
So the question is about the victims. The NTSB is going to lead that portion of the contact with the victims. I believe American is going to be involved with that as well, and so will the FAA and the Department of Transportation.
Secretary Duffy, we're going to take some questions over here. 1, 2, 3, 4. First, Secretary Duffy, the flight path that the helicopter was on, is that a common flight path, and is it normal for helicopters to get clearance to cut across busy approach paths?
So, I don't know if you all could hear the question. It's a question about the flight path of the helicopter. I don't want to go into too much detail about the information we have from the FAA, but obviously it is not standard to have aircraft collide. I want to be clear on that. But prior to the collision, the flight paths that were being flown from the military and from American, that was not unusual for what happens in the DC airspace.
And as this investigation moves forward, we will be able to provide more information to you about the details of that statement.
I wanted to follow up on that question regarding the flight path, because you said it's standard. So can you speak to the conversations with air traffic control? Were there blind spots here? I don't know if you understand.
So the question is, were there blind spots with air traffic control? I don't want to make statements about that. I don't need into that answer. But again, I think whether it was air traffic control, whether it was military aircraft, helicopters, or the American flight, everything was standard in the lead up to the crash. Now, obviously, there was something happened here. You'll get more information and more details as this investigation moves forward. We'll learn what happened. But again, those who live in the D.C. area, we see military helicopters fly up and down the river. It's a standard path that they fly. They're used to aircraft landing at DCA, and there's a procedure in place because this happens every day. Something went wrong here. I look forward to the time and point when we can give you that information, but I don't want to comment on that right now.
Senator Kane, Senator Warner, you all have been, very vocal about your concerns about busy runways here, air traffic. I know it's still early in the investigation. I'm just curious if any steps that you all plan to take to address that.
We have raised this issue continuously. We've got very busy airspace. I think we will ask questions, but at the appropriate time. But we are in this period right now where families are still being notified. We're trying to figure out what happened. There'll be time for those discussions.
Yeah, I'd just say the same thing. We've been pretty plain about our concerns, but it isn't a good time to speculate right now. We have faith that the NTSB will provide the answers about this.
Okay, you fourth here, and I'm going to take 3 in the middle, and then we're going to have to wrap 1, 2, 3 after this young man.
Thank you, appreciate it. Chief, I know again, I can imagine it must be traumatic for your first responders to have to deal with this. How are they doing right now, and are you all going to be offering any services to help them as they process this?
So thank you for the question. Our first responders are resilient people, but yes, this call will be hard for them. Our peer support teams are already engaged with the responders, and we'll be following up on that to make sure that they're okay. But I think the concern is real.
Thank you, Mr. What kind of communication was there between the helicopter and the tower, the plane and the tower, and the helicopter and the plane?
I don't want to say too much on the communication between the helicopter and the tower and the airline and the tower, but I will say this: there was communication. It was I would say standard communication. So there was not a breakdown, if that's your question, in communication between the military helicopter and the American airline flight. There was communication between the aircraft and the tower.
Was the plane aware there was a helicopter in the area?
I would say the helicopter was aware that there was a plane in the area.
You mentioned that. So the president, you said yesterday that he called into the briefing room. Has he returned to the briefing room since then? Have you spoken? Also, a question about the National Security Advisor, Mike Waltz. He's saying that there was 30 bodies that have been recovered. That you just said that in the White House. Curious. I know you're in this presser right now, so that's hard for you to update. But I do have a question on POTUS in the briefing room.
I can do the body. Okay, so in terms of body recovery, we as we recover bodies, we have a process, and we're not counting any bodies until they're in the possession of the medical director. So there may be some fluctuating in numbers that other people would report, but our numbers from the medical examiner.
So just in regard to the president in the briefing room, I've been with this team for the last hour plus as we've worked through the details of the information we wanted to give you. But it is my understanding that either this morning he was going to be in the situation room, or the situation room is obviously briefing the president. He has been kept in full appraisal of what is taking place.
Okay, last two. You ma'am. First.
You mentioned that the aircraft were on a standard flight pattern. Just curious, when the airport opens at 11 today, will planes be on that flight pattern again, or are they being directed to fly a different way to leave?
safety is paramount, and I don't have that information quite yet from the FAA, so I don't want to provide I don't want to provide an answer or inaccurate information on what routes will be flown out of DCA.
Okay, last one.
Two questions really quickly. What do you know about the experience and history of the pilots of both the American Airlines plane and the Army Black Hawk helicopter? And then for Secretary Duffy, last night the President had said that this could have been prevented and questioned why air traffic control didn't tell a helicopter what to do. Is that something that investigators have determined should have happened in this situation?
Secretary, just quickly, I don't have a lot of information to release, but these were experienced pilots. I know that the captain had 6 years with PSA, or almost 6 years with PSA, and the first officer almost 2 years. Again, standard approach, and that's about all I can say. Thank you.
In regard to the military, I don't have information in regard to the experience of the military pilots. I would just note that this was classified as a training mission. Sometimes people could think that a training mission is someone who is inexperienced in the cockpit. We call these missions that are flown in the DC area as our pilots are getting hours and experience training missions. So don't read into that we had how many hours the pilots on the military aircraft had. And you had another question for me that was...
Last night the President had said that this could be prevented, and also that air traffic control, questioning why they may not have communicated with the helicopter telling them what to do.
We are going to wait for all the information to come in from this vantage point, but to back up what the President said, what I've seen so far, do I think this was preventable? Absolutely.
Thank you.
Is there an acting FAA director?
Officials wrapping up a press conference at Reagan National Airport after a deadly collision last night between a regional American Airlines plane and a military helicopter. We don't believe there are any survivors. We're switching from a rescue operation to a recovery operation. Those headlines coming from the DC Fire Chief, John Donnelly, who briefly described the conditions that the search and rescue effort had to confront: frigid conditions, heavy wind, and ice on the water. As for how this happened, very few answers.
They're looking into it. The early indications of what happened, they basically came out and said everyone was kind of on a standard path. These were experienced pilots. It was a clear night. Was this preventable? You just heard Transportation Secretary Duffy say, absolutely.
Joining us now, Bloomberg's Anne-Marie Hordern, who is on the ground at Reagan National Airport. Anne-Marie, the next phase of the investigation, what do we know about what that's going to look like?
Well, the NTSB is going to be the ones that handle the next phase of this investigation. But I think whether it was the new Transportation Secretary Sean Duffy or the mayor or the DC Fire and EMS chief, what we learned here is that you see a number of institutions wanting to work together to get to these answers. They are clearly moving in, as we heard from the DC chief there, John Donnelly. They're clearly moving into a recovery phase from a rescue phase. We do know that they say the airport will be opened at 11 a.m. It has been shut, and at this moment, they don't believe there are any survivors, and that is why is that moving into that recovery stage. When it comes to questions about what happened here, I think there's a few interesting tidbits to pick out. One, Sean Duffy did say, the Transportation Secretary did say that the helicopter and the aircraft were, quote, in a standard flight pattern. And he did say those early indicators, they have early indicators, so he didn't share all the details of what went wrong, because he wanted to also really assuage American concerns that it is still safe to fly in American airspace today. But then interesting, you heard from the American Airlines CEO as well, who made his way to Washington, D.C. overnight. And he said at this point, we don't know why the military aircraft came into the flight of the PSA aircraft. So this is going to be a serious investigation that the NTSB will be having to deal with, but also the DOD and the Pentagon at some point today. Hopefully we'll hear from Pete Hegseth, the Defense Secretary.
Anne-Marie, there were questions about assuring people that it was safe, especially given that DCA is going to reopen at 11 a.m. And some of those details are crucial so that people understand exactly what went wrong. Do we have a sense of when we will learn exactly where the breakdown in communication happened, given the fact that a lot of the flight patterns were safe and that Sean Duffy just said that this was absolutely preventable?
They didn't offer a timeline, so everyone's going to wake up with a ton of questions, and there's going to be this huge investigation and review underway, but they didn't offer a timeline of when we could actually get those answers. Is it a matter of days, or is this going to be weeks, or potentially, have we seen in the past, months until we actually find out what went wrong? So potentially they're going to want to assuage Americans' concerns about the safety, and overall, aviation in America is very safe. We did, though, have issues the past few years that have been quite concerning with close calls when it comes to the airline industry. And there's been a lot of calls to beef up, of course, air traffic control. We saw a huge fight last year in Congress about that, but they didn't offer any timeline just yet. But of course, they did say that they'll continue these briefings, so potentially we'll get more updates on when we will get those answers later today.
Anne-Marie, appreciate it. Thank you. Joining us around the table is Bloomberg's Sid Phillip, our resident aviation expert. Sid, what did you learn from that news conference?
I think at the moment, everyone's still uncertain about what really went wrong because, I mean, everyone was talking about how everything was on a standard pattern and nothing was really unusual. And still something went wrong. And I think that's what regulators and investigators will be looking into to actually figure out what happened. Why did the military helicopter come in the path of the American Airlines plane? And what can be done in the future to prevent some sort of incidents like that? Because, I mean, obviously there's been a sort of lot of talk about close calls last year, and there was that whole fight in Congress where President Biden was fighting for 2,000 ATC hires in 2025. And so with the new administration coming in and with new management at the FAA, it will be important to see how they sort of beef up and also what really was it an air traffic control issue or not?
Well, I was going to ask, could it be anything else other than an air traffic control issue, given the fact that they took out the pathways, they took out the potential for a flight error, given the fact that they said these were all very experienced people and everything was common? What else could it be?
It's just sometimes a Swiss cheese where just the holes line up really badly, and essentially you've got sort of an incident there where everything suddenly goes wrong, where you've got a plane that's in its final approach into an airport. You've got a military aircraft on sort of in the flight path, and sometimes it's just sort of things happen. I mean that's where regulators will look in to see where they can sort of prevent such incidents from happening in the future.
Sid, appreciate your time, sir. Thank you. Sid Phillip there of Bloomberg. Just moments ago, a headline that none of us wanted to read coming from the DCFI chief, John Donnelly, saying that we don't believe there are any survivors, that we're switching from a rescue operation to a recovery operation. For an update on that and stories elsewhere, here's Danny Berger with more. Hey, Danny.
Hey, John. Yes, just to reiterate what we heard over the past 30 minutes, more details emerging around the deadly collision of an American Airlines plane and a military helicopter near Reagan National Airport last night. Officials said in that press conference that 27 bodies have been recovered, and authorities do not believe that there are any survivors. U.S. Secretary of Transportation Sean Duffy said the crash was absolutely preventable. Elsewhere in these markets, Tesla fourth quarter earnings and revenue fell short of Wall Street estimates. But as you can see there, shares up more than 4% in the pre-market. CEO Elon Musk predicted an epic period of growth for the company and said it will begin robo-taxi operations this year. Prices for Super Bowl ads have risen to a record of over $8 million. That's up from last year's record of $7 million. The game is set to air on Fox and its free streaming service, Tubi. Fox reportedly received steady interest from a variety of companies. Analysts say this year's ad will feature more humor, celebrities, and nostalgia, and fewer movie trailers. That's your brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, an ECB rate decision. From New York, this is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Equities just about positive here by a third of 1% on the S&P 500. Attention turning towards monetary policy briefly on the ECB. Over at the European Central Bank, as expected, an interest rate reduction of 25 basis points on the deposit rate. We're down from 3 to 2.75. This was widely anticipated and expected, widely indicated from the Governing Council and the members themselves over the last few weeks. A rate cut from the ECB of 25 basis points, Lisa, down from 3 to 2.75.
Yeah, the ECB is determined to ensure inflation stabilizes at 2%. They are not pre-committing to a particular rate path. They're going to take a meeting-by-meeting decision. This basically is in line with expectations. Curious to see how they basically how they frame the risks ahead, whether it's a downside risk to growth, whether it's the potential for sticky inflation, whether they talk about tariffs at a time where that seemed to be preeminent among the Bank of Canada officials.
The first decision from the European Central Bank in 2025 is a rate cut of 25 basis points. With the latest, we can head over to Frankfurt, Germany and catch up with Bloomberg's Lizzie Burden. Lizzie, that's the decision. I'm sure you're reading through the details as well going into this news conference in the next 30 minutes or so. What stands out for you?
Yeah, as you say, John, unanimously expected by economists, fully priced in by markets, because the focus has been turning from too high inflation to too low growth. This morning we had the latest reads on GDP in the Eurozone, and we saw contractions in France and Germany. We saw total stagnation across the Euro area. So politics really weighing on confidence here. And this is before we even really know how Donald Trump's tariffs on Europe are going to play out. So economists were seeing another cut in March already. What we're really interested in today are hints about April. So interesting to see that, they're all saying that disinflation is well on track. They're going to follow a data-dependent approach, very much expected. In terms of market reaction, barely any movement in the euro. We're really on the watch for euro-dollar parity at the moment, of course, given Powell has said he's not in a rush to ease policy. If you start to see more and more of a divergence between the ECB and the Fed, more euro weakness, that could feed back into the inflation picture, especially if you combine it with higher oil prices, and that will create headaches for Christine Lagarde. But if that rate it gets raised in the press conference, I am sure she will say we are data dependent, not Fed dependent.
I'm glad you went there. Data dependency seems to be the phrase du jour, and that's basically what they go back to yet again. I'm curious which data is most important for an ECB that is a single mandate central bank, unlike the Federal Reserve.
Well, as I say, they seem to have brushed aside that 2.4% inflation print for December, the uptick. They've all talked about the concerns about services inflation, and yet, if this is anything to go by, a cut today and a cut expected in March, the focus, Lisa, seems to be on growth. And you say data dependence, well, it's hard to deny that all around the world, central bankers have an eye on the White House and Donald Trump's trade policy.
Lizzie Burden on the latest in Frankfurt, Germany. Lizzie, thank you. Following a 25 basis point reduction over at the ECB on the deposit rate. There's two paragraphs that jump out here for me, and it's the second and third paragraph of the statement from the ECB. The disinflation process is well on track. Inflation has continued to develop broadly in line with the staff projections and is set to return to the Governing Council's 2% medium-term target in the course of this year. That sounds great. So what should that mean for policy? This line on policy, finance conditions continue to be tight, also because monetary policy remains restrictive and past interest rate hikes are still transmitting to the stock of credit, with some maturing loans being rolled over at higher interest rates. Aren't they making an argument to lower interest rates even more in the second paragraph, and in the third, acknowledging that monetary policy is too tight, which is kind of odd for me with the ECB at the moment, that they're not being more aggressive with a much more dovish stance, given the disinflationary process that they appear to have confidence in?
This is an endorsement of long and variable lags. This is saying that the long and variable lags are affecting and constraining growth. This speaks of some of the dissent that maybe there is on the ECB Governing Council. Some people looking at that 2% target as gospel, saying we're not there yet. Others saying there is real downside potential for growth, sort of creeping into that dual mandate type of position.
Gargi Chowdhury of BlackRock joins us in the studio. Gargi, good morning. It's good to see you.
Good morning. It's good to be here.
Won't just talk about the ECB, very sad day, and a strange day to be talking about markets, but here we are. The central bank decision from the ECB is about 5 minutes old. You heard from Lizzie Burden, they're not Fed dependent. Are they tariff dependent? How many of us are?
I think the entire market is paying close attention to what we're going to hear in terms of fiscal policy. We saw the Fed do a really nice dance around that yesterday. I think what was important to me was the Bank of Canada statement. I thought they sort of talked about how tariffs might affect them pretty importantly, and I think many other central banks will probably, at some point when we have more clarity, have to pull that into their forecast. I don't think that we're there yet with the Fed.
It is curious to see that other central banks can talk more openly about tariffs than U.S. central bankers. Is this an excuse that central banks like the ECB can use at a time when they are a single mandate central bank but are facing a real downside growth to shock to growth?
I think for both the Fed as well as, we're going to hear more from the ECB in a little bit of time, I think this just goes to show they're at a really tricky point. You can't make policy decisions based on fiscal policy measures that are yet to come through. You don't know the details. You don't know how much the pass-through is going to be. You don't know what the demand effects are going to be. You don't know what the retaliation is going to be. I think it puts the Fed certainly in a tricky position. I did hear some comforting words yesterday from Chair Powell, which we can talk about. But I think we're seeing that from ECB as well, that they, despite somewhat lingering inflation, have to, and their single mandate, they have to focus on the really poor GDP print that we saw this morning.
The comforting words. You heard something yesterday that wasn't just a lot of words. What were those comforting words?
So a couple of things. The comforting words, I would say, were, number one, that the hawkishness that appeared in the FOMC statement was just sort of a cleanup, operational. One can argue whether that needed to be the case, but at least that wasn't a hawkish direction. Number two, I think he made a point around going forward for further rate cuts. Inflation doesn't need to be at 2%. I thought that was an interesting distinction. They've made that before, but that was before rates were at 4.375%. Hearing that again was a reassurance. And then another thing that they talked about was just around they see that path to 2%. They are seeing that. They talked about how the last two prints on PCE have been pretty friendly for the markets, but that it's not quite there yet. I thought those were all good signs for the Fed, at least in the second half of the year, to maybe continue their rate cutting cycle.
We had a challenge potentially in some people's minds to US exceptionalism on Monday. How strong do you think that challenge was?
I think that it was one headline. This is the first, we think about this AI trade, this was the first sort of wrinkle that came through on the AI trade. Obviously, it's very early. As of right now, the way, even when we heard from some of the companies that reported earnings, this isn't something that immediately stops any kind of CapEx related to AI, not as of yet. So I'm not questioning U.S. growth based on this. Now, obviously, we get GDP in a few minutes. There might be some revisions because of other reasons, trade deficits, et cetera. But the AI story is, I think, much more around broader adoptability now, and very good for adopters of AI, for software companies, perhaps. I don't view this yet, and we don't know enough about broad-based end of AI, which is kind of what the market was pricing in on Monday.
You saw some of the moves on Monday. It went beyond just NVIDIA. We saw it with pipeline operators, saw it even in nat gas, saw it in gas producers as well. Would you go as far as saying that maybe the energy side of this trade might be done for now?
I don't think I'd go as far as to say that quite yet. I think we don't have enough of the details yet. What I think I would take away from everything we learned about DeepSeek was it's incredible to have this kind of 97% efficiency. It's so much better to have models being trained, but the inferencing power will probably still require a lot. I think that this broadens out the AI trade to perhaps other parts of the market. I think it's a healthy sign for what we saw on Monday, where 70% of the S&P was still up. I think that's a good thing. I think investors will probably continue to look for ways to hedge their tech exposure, and we've seen that. The good news is there's earnings coming through in other parts of the market. So this is a good time to think about these other diversifying hedges.
So just real quick here, U.S. exceptionalism still intact. You like certain aspects of fixed income. What else have we learned over the past couple of days, I guess? We're going in days right now.
Yeah, we're going in days right now. So I think what we've learned is the Fed's not in a rush to do anything with rates, which means an incredible opportunity to clip coupons. So that's number one. I think we learned that we need hedges and diversifiers to our portfolio here. It's not just about those 5 big stocks, right? We learned that. So thinking about other hedges and other diversifiers, whether that be in large cap value, looking at financials, whether that be in buffered strategies, so really protecting your downside a little bit, and whether that be in things like gold, which we've talked about since the beginning of the year and has been doing pretty well.
Gagi, appreciate your time. Thanks for making some time for us this morning. Thank you. Gagi Chowdhury there of BlackRock on the latest in financial markets. Moments ago, about 10 minutes ago, an ECB rate cut of 25 basis points. In about 20 minutes from now, you'll hear from the ECB President, Christine Lagarde, a news conference in Frankfurt, Germany. Before we get there, in just a moment, we'll have some economic data in America. Another read on GDP, the 4th quarter this time, and then we'll get a look at initial jobless claims. Claims the one to watch, I think, at the moment for this bond market. What happens next with the Federal Reserve? Sonal Desire, Franklin Templeton, here to react. From New York, this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Some economic data in just a moment. A read on fourth quarter GDP in the United States. Look out for jobless claims as well and continuing claims. Mike McKee will break that economic data in just a moment. Equity futures on the S&P negative or rather positive by 0.3 on the S&P. On the Nasdaq 100 up by 0.5%. On the Russell up by 0.75%. In the bond market, 2-year, 10-year and 30-year. Yields lower here by 4 basis points on 10s to 4.48. With that economic data, let's cross over to Mike McKee. Morning, Mike.
Good morning, John. Well, the fourth quarter GDP numbers are coming in, and as anticipated by economists after yesterday's trade report, it is lower than anticipated, 2.3% for the fourth quarter. A lot of this, of course, is going to be due to the trade report we got yesterday, big trade deficit. Personal consumption up 4.2%, however. Americans were spending money during the month, and we probably would have had a 3% or better GDP number if not for the trade figure. The GDP price index, 2.2% on the quarter, comes in higher than last month, higher than the third quarter rather, but a little bit lower than anticipated. The core at 2.5% comes in as anticipated. Now, what we see is that this is for the 3 months average. The Fed yesterday backed out those numbers and said tomorrow we should see 2.6% on the headline for the December figures and 2.8% for the core. Jobless claims, of course, everybody keeping an eye on, and you'll be happy to know, John, 207,000, a big drop from the 223 reported last week, and on a continuing basis, it is 1,858,000 down from 1,900,000. So clearly, it may be that the California fires had a short-term effect, and that has worn off. Still very low jobless claims numbers, strong labor market, and growth, with the exception of trade, and we can look up the exact numbers, still strong. So you can understand why Jay Powell is saying maybe the Fed can take time and wait.
Yeah, Mike, I'm with you. Great to see. Jobless claims dropping back to 207 against an estimate of 225, as Mike indicated. As expected, GDP a little bit softer than expected. Personal consumption pretty strong, so that's good to see as well. In the bond market, just off the back of these numbers, yields were lower by 3, 4, 5 basis points across the curve, 2s out to 30s. At the moment, we look like this. We're down just 2 or 3 now on a 10-year, back to 450 on 2s at the moment, Lisa, down a single basis point to 420.32, and equity futures still positive by 1/3%.
Not a huge reaction. Cameron Dawson saying for the Fed, the recalibration phase is over. You're seeing in markets not really responding because it doesn't seem like anything in this report warrants a Federal Reserve response. Otherwise, it confirms what we have known before. The economy is strong. The jobs market isn't necessarily weakening in some kind of massive way. And so it is a non-story for markets, at least at the moment.
One of the best in fixed income joins us now for more. Sonal Desai of Franklin Templeton. Sonal, good to see you.
Good to see you too. Good to be here.
The chairman said this, that policy was meaningfully restrictive, and you believe actually we're now in the neutral range. What explains the difference between the two of you at the moment?
Oh, no, the policy is not, has not been restrictive for a while now. And, you know, I did note when he said that it's very difficult to figure out what neutral is. But, you know, facts matter, and you look at what the U.S. economy has done over the period of time that we've apparently been in extremely restrictive territory, and clearly we weren't that restrictive because the economy shows us. And I'd say that I think a part of the reason the Fed cannot say that, well, you know, we're far from, that we are far from being in the neutral rate range is because then the next step would be, well, why aren't you raising rates? And I don't think they need to raise rates, but they're going to need to keep them high for a quite a long period of time.
On the margins, Sonal, you were someone who raised this prospect of longer end yields rising quite considerably in the face of a resurgence of inflation.
Does this dampen that risk if there is a Fed that might not be saying exactly what you see to be the reality, but isn't moving, isn't raising rates, but isn't lowering rates either?
Well, no, because I think a large part of the reason that I think long-end rates are going to sell off is actually to do with the fact that I think there are going to be a whole host of policies, and I actually don't think tariffs are one of them, but I do think fiscal policy risks over the next 60, 90 days, we'll see what happens. But I think those are factors which could feed into inflation, potentially how immigration gets executed in terms of deportations, et cetera, that could have negative consequences as well. But I'm more concerned on the inflation front than on the growth front from these.
This is important. We've been focusing on tariffs as a potential economic headwind in terms of both growth but also increasing inflation. You're saying that's the wrong place to look. Which policies in particular are most potentially inflationary that you're watching out for?
So I am watching very much at what happens with the budget. It's really about the fiscal. It really is. We are running $2 trillion budget deficits in an economy that's growing definitely above potential at this point. So that's one element that I'm looking and following very closely. It looks like this Republican caucus is fairly indisciplined, so there's some hope that they can't actually expand the budget deficit as much as actually making good on all the promises that have been put out that would result in a massive expansion, and I do think that would have a negative consequence. Immigration, look, if you actually could throw out 4 million people overnight, that would be disruptive and it would have inflationary consequences, because if you're a restaurant owner and half your workforce doesn't show up, you suddenly need to hire more people and you're going to bid up wages, and that's inflationary.
Based on what you've seen with earnings, based on the early indications from the administration, have you changed your view that the bigger risk is to the upside with inflation to then, say, a deterioration in growth?
No, because actually I think that something which isn't considered very much is the fact that deregulation actually really is going to result in some positive, it's going to have a positive impact, because in the end, small business owners' confidence has skyrocketed. Yes, I know that they're typically more Republican, it's a bigger Republican base, but ultimately that confidence determines whether they want to hire more, whether they want to spend more on CapEx. All these things are kind of positive on growth. And finally, I really don't think tariffs necessarily have a negative growth impact on this country. Of course, the ECB is going to respond. It's a large exporting group. We, as today's GDP showed, are large importers. So tariffs aren't going to hurt our growth necessarily.
Certainly going to hurt Europe and China and others if they do go forward with this. Can we get the bond market call? I sense maybe you think we see 5 before we see 4 on a 10-year yield.
Oh yeah. If we're talking about 5 or 4, I would definitely say 5 before 4. Because I don't see the rational... right now, I need to see that trigger for significant economic weakness, which I'm not seeing yet. I'm not saying it can't happen. I don't think what we saw on Monday with DeepSeek is that, the canary in the coal mine. I really don't think so. But I do think that we don't know. And on this, I do agree with Fed Chair Powell. The uncertainty we're seeing today is not commensurate with the uncertainty we saw around COVID, for example, before we had vaccines. We didn't know when things would reopen. We're not looking at that. If it was something like that, you could call it.
What do you make of his stance regarding the uncertainty to policy?
I think Powell showed his origins as a lawyer. And I think that was a good thing. Overall, I'd say that what he said was, there wasn't very much there, but he's being honest. There isn't very much he can say at this point. True. I thought that he actually moderated some of the questions with respect to tariffs in a very, very reasonable way. Tariffs are relative prices, guys. It's not going to suddenly take us back to 9% inflation.
Sunil Desai, appreciate your time. Thank you. Sunil Desai there, Franklin Templeton. The latest on the Federal Reserve and on financial markets as well. Let's get the latest on our top story and head back to Reagan National Airport in the nation's capital, Washington, D.C., where Bloomberg's Anne-Marie is standing by. Anne-Marie, what's the latest?
Good morning, John. Well, the latest is that this rescue mission that has been taking place for hours overnight since that mid-air collision from that passenger jet and that Black Hawk helicopter around 9 p.m. last night is now moving to a recovery phase. They do not think there are any survivors. We were briefed here, the press was briefed in the last hour about what exactly the next steps that are taking place. There'll be an independent investigation from the NTSB, the National Transportation Safety Board, and then from there, there's just so many questions that we are waiting to hear. Potentially, when they have this opening briefing from the NTSB later today, we will get some of those answers. But we did learn from the Transportation Secretary, Sean Duffy, that he did say that both these aircrafts were in standard flight path. But then the American Airlines CEO, who was also at this press briefing, said it's unclear why the helicopter came into the flight path of that passenger airline. A ton of questions still remain at DCA in the nation's capital, a very high-intense aircraft airspace, a ton of capacity here. We should note, though, that anyone that is traveling today, this airport will reopen at 11 a.m.
Anne-Marie, that question was asked in the news conference. How difficult will it be to reopen this airport at 11 a.m.? What was the answer?
Well, it's going to be a little bit difficult, obviously, because things are backed up. But, I mean, to be honest, I'm supposed to fly out of here at 11:10, 11:30 a.m., and I just got an alert that my flight is still on track to go. So they are trying to move people along and make sure people meet their flights. But obviously, it's a pretty tense situation here at the airport. There's a tremendous amount of police. There's a tremendous amount of official figures. I know Governor Glenn Youngkin of Virginia is at the airport right now. So I would say it is going to be, you have to deal with some potential delays, but they do plan to still reopen this at 11 a.m. Meanwhile, the recovery effort is still happening behind me in the Potomac River.
Meanwhile, there's a question around who is leading the FAA. Do we have a sense of who the potential nominee could be to take the helm of that organization?
Yeah, we're still waiting to hear about who is going to lead the FAA. You know, Whitaker stepped down in December. It comes at a very precarious and difficult time because we had a transition of power here just last week, and the Trump administration is still getting their feet wet. They're still making sure they have all their cabinet secretaries in place. Sean Duffy was confirmed earlier this week, but he was only sworn in yesterday. So today really feels like his first full day on the job. And he said when he took to that podium in the last hour that this is not the circumstances he wanted to be speaking with everyone. So we do know that they are still working on making sure that they have the appropriate staff in place. Of course, there's a number of civil servants, career servants, who are part of these organizations that can help make sure things are going through. But we are also to talk about, you know, we're right here south of the Pentagon. The Defense Secretary. There's going to, of course, be an investigation. We heard from Pete Hegseth from the DOD and what happened with this helicopter that we've learned was on a training route last night. We do see a lot of helicopters in Washington, D.C. There's a ton of commercial aircraft. There's also military aircraft here. Just the nature of this airport and the nature of this city.
Anne-Marie, appreciate the update. Anne-Marie from the nation's capital at Reagan National this morning. Let's give you an update on stories elsewhere with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Caterpillar shares are down nearly 5% in the pre-market trade. Fourth quarter earnings did beat analyst estimates, but Caterpillar warned that sales and revenue will be slightly lower in 2025. Those results, though, could quickly change for all global manufacturers given expected tariffs from President Trump. NVIDIA shares are also lower this morning, down by just under 1%. The Trump administration is reportedly exploring more curbs on NVIDIA chip sales to China. Sources tell us that officials are focused on expanding restrictions for chips used for AI development. NVIDIA argued restrictions push China to become independent of U.S. tech, which will only in turn hurt U.S. companies. Elsewhere in tech, SoftBank is said to be in talks to invest as much as $25 billion in OpenAI. People familiar say that this would be on top of the $15 billion that CEO Masayoshi Son has already committed to the American Stargate AI infrastructure venture. The move could potentially make SoftBank OpenAI's biggest backer. OpenAI, for its part, declined to comment. That's your Bloomberg Brief. John.
Hey, Danny, thank you. Appreciate it. Up next on the program, we'll set you up for the day ahead and count you down to a news conference with the ECB President, Christine Lagarde. All of that in just a moment. From New York, this is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ. Only on Bloomberg.
The opening bell about 43 minutes away. Equities positive by 0.2%. The data okay. In fact, jobless claims encouraging. They power back. The right kind of downside surprise. Yields are lower by about a basis point on a 10-year at the moment, 4.51. In just a moment, you'll get a news conference with Christine Lagarde. Before we get there, I want to bring you the week ahead, the next couple of days. Later on this afternoon, earnings from Apple and Intel after the closing bell. On Friday, PC on Saturday. A big one. President Donald Trump's self-imposed tariff deadline, so look out for that one. As for the ECB, the European Central Bank earlier this hour cutting interest rates by 25 basis points. Some encouraging words on disinflation. The disinflation process is well on track. Deutsche Bank and Mark Wall, the chief European economist, with this to say: this is the 5th cut in total and the 4th in quick succession. There is really no reason to think the ECB won't continue to cut interest rates, at least to a neutral level, and we think quite probably below neutral by year end. And I think that gives you a flavour, Lisa, of how different the conversation is at the ECB compared to what we heard from the Federal Reserve just yesterday afternoon.
No one is challenging why they're cutting rates, even if the inflation rate isn't down to a total 2%. As the ECB said in their statement, the economy is still facing headwinds. They also talk or infer long and variable lag, saying that the interest rate hikes from the years past still are trickling through to the economy. They have negative growth in certain sectors. The U.S. is growing rapidly. The story is much clearer, even though they're a single mandate bank.
and there hasn't been a drop to 2% of inflation.
Finance conditions continue to be tight at a time when maybe you can make the argument that they really shouldn't be at the European Central Bank. This really is the complete opposite of what we heard from the Federal Reserve just yesterday.
You can't say that conditions are tight in the U.S. by any measure, given the fact that spreads are so tight. At the same time, when you look at bank lending in the European region, you see constraints there. You see a reluctance to lend, a reluctance to ask for loans. It is a completely different picture. Are they being given a pass as well to potentially cut rates much more quickly in the face of the risk of tariffs?
The first news conference of 2025 with the ECB President Christine Lagarde. Let's take a listen.
The Governing Council today decided to lower the three key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The disinflation process is well on track. Inflation has continued to develop broadly in line with the staff projections and is set to return to our 2% medium-term target in the course of this year. Most measures of underlying inflation suggest that inflation will settle at around our target on a sustained basis. Domestic inflation remains high, mostly because wages and prices in certain sectors are still adjusting to the past inflation surge with a substantial delay. But wage growth is moderating as expected, and profits are partially buffering the impact on inflation. Our recent interest rate cuts are gradually making new borrowing less expensive for firms and households. At the same time, financing conditions continue to be tight, also because our monetary policy remains restrictive and past interest rate hikes are still transmitting to the stock of credit, with some maturing loans being rolled over at higher rates. The economy is still facing headwinds, but rising real incomes and the gradually fading effects of restrictive monetary policy should support a pickup in demand over time. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So looking at the economic activity. The economy stagnated in the fourth quarter, according to Eurostat's preliminary flash estimate. Manufacturing continues to contract, while services activity is expanding. Consumer confidence is fragile, and households have not yet drawn sufficient encouragement from rising real incomes to significantly increase their spending. Nevertheless, the conditions for a recovery remain in place. While the labor market has softened over the recent months, it continues to be robust, with the unemployment rate staying low at 6.3% in December. A solid job market and higher incomes should strengthen consumer confidence and allow spending to rise. More affordable credit should also boost consumption and investment over time. Provided trade tensions do not escalate, exports should support the recovery as global demand rises. Fiscal and structural policies should make the economy more productive, competitive, and resilient. We welcome the European Commission's Competitiveness Compass, which provides a concrete roadmap for action. It is crucial to follow up with further concrete and ambitious structural policies on Mario Draghi's proposals for enhancing European competitiveness and on Enrico Letta's proposals for empowering the single market. Governments should implement their commitments under the EU's economic governance framework fully and without delay. This will help bring down budget deficits and debt ratios on a sustained basis while prioritizing growth-enhancing reforms and investment. Looking at inflation. Annual inflation increased to 2.4% in December, up from 2.2% in November. As in the previous months, the increase was expected and primarily reflected past sharp drops in energy prices falling out of the calculation. Along with a month-on-month increase in December, this led energy prices slightly higher on an annual basis, after 4 consecutive declines. Food price inflation edged down to 2.6% and goods inflation to 0.5%. Services inflation edged up to 4%. Most underlying indicators have been developing in line with the sustained return of inflation to our medium-term target. Domestic inflation, which closely tracks services inflation, has remained high as wages and some services prices are still adjusting to the past inflation surge with a substantial delay. At the same time, recent signals point to continued moderation in wage pressures and to the buffering role of profits. We expect inflation to fluctuate around its current level in the near term. It should then settle sustainably at around the 2% medium-term target. Easing labor cost pressures and the continuing impact of our past monetary policy tightening on consumer prices should help this process. While market-based indicators of inflation compensation have largely reversed the declines observed in the autumn, most measures of longer-term inflation expectations continue to stand at around 2%. Looking at the risk assessment now. The risks to economic growth remain tilted to the downside. Greater friction in global trade could weigh on euro area growth by dampening exports and weakening the global economy. Lower confidence could prevent consumption and investment from recovering as fast as expected. This could be amplified by geopolitical risks, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, which could disrupt energy supplies and further weigh on global trade. Growth could also be lower if the lagged effects of monetary policy tightening last longer than expected. It could be higher if easier financing conditions and falling inflation allow domestic consumption and investment to rebound faster. Inflation could turn out higher if wages or profits increase by more than expected. Upside risks to inflation also stem from the heightened geopolitical tensions, which could push energy prices and freight costs higher in the near term and disrupt global trade. Moreover, extreme weather events and the unfolding climate crisis more broadly could drive up food prices by more than expected. By contrast, inflation may surprise on the downside if low confidence and concerns about geopolitical events prevent consumption and investment from recovering as fast as expected, if monetary policy dampens demand by more than expected, or if the economic environment in the rest of the world worsens unexpectedly. Greater friction in global trade would make the euro area inflation outlook more uncertain. Looking at the financial and monetary conditions now. Market interest rates in the euro area have risen since our December meeting, partly mirroring higher rates in global financial markets. While financing conditions remain tight, our interest rate cuts are gradually making it less expensive for firms and households to borrow. The average interest rate on new loans to firms declined to 4.5% in November, while the cost of issuing market-based debt remained at 3.6%. The average rate on new mortgages edged down to 3.5%. Growth in bank lending to firms rose to 1.5% in December, up from 1% in November, amid a strong monthly flow. Growth in debt securities issued by firms moderated to 3.2% in annual terms. Mortgage lending continued to rise gradually, but remained muted overall, with an annual growth rate of 1.1%. Credit standards for business loans tightened again in the fourth quarter of 24, having broadly stabilized over the previous 4 quarters, as reported in our latest bank lending survey. The renewed tightening mainly reflected banks becoming more concerned about the risks faced by their customers and less willing to take on risks themselves. Demand for loans by firms increased slightly in the fourth quarter, but remained weak overall. Credit standards for mortgages were broadly unchanged after 3 quarters of easing, while the demand for mortgages again increased strongly, mainly because of more attractive interest rates. In conclusion, the Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. And in any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions. Thank you.
First question goes to Balazs Koranyi of Reuters. Balazs, please.
Good afternoon. Thank you for taking my questions. First question is about the future. Where do we go from here? Are you still confident about the direction? Your fellow board member, Isabel Schnabel, said we're getting closer and closer to the point where you need to have a discussion about how much further rates can come down. Did you start having the discussion today, and what's your own view on this point? Second is about the neutral rate. Speaking in Davos, you gave a slightly different range for your neutral rate estimate than in the press conference here. Why did you change the estimate? Why did you lower the midpoint? What is the significance, or if there is a significance, of this change?
Thank you so much for your 2 questions. First of all, I just want to remind you that by lowering by 25 basis points today our three interest rates, and particularly the DFR, we have now cut down by 125 basis points relative to the high level where we were. Number two, there was no discussion as to whether this decision was appropriate or not. It was a unanimous decision. So all governors supported the decision that was articulated by Philip Lane this morning of cutting by 25%. You will have seen in the monetary policy statement clearly stated that at this point in time, we are still in restrictive territory. And we have not had a discussion, because it would be premature at this point in time, about the point where we have to stop. We know the direction of travel. You've mentioned it in your question. And this is the direction that we will take, at which pace, with what sequence, what magnitude, will be informed by the data that we will collect in the coming weeks and months, and by the analysis that our staff will conduct. We are lucky that for our next monetary policy meeting in March, we will receive a projection prepared by staff, which will be informed by the economic environment as it unfolds, and we will have, in the meantime, 2 additional readings on inflation. Those are data points, granted, but a series of inflation readings are informing those decisions. On the on R-star, natural interest rate, you will be pleased to see in 8 days, on February the 7th, a publication by staff on the revision of the natural interest rate. And, you know, this is not something that we have discussed. As you know, it's a range, and it's a range that has, that does not give a guidelines or a destination. It's an indication, and it's in many ways a conceptual principle that is elaborated by a number of models, and that's what staff will publish and will comment upon. So you'll have plenty of it to elaborate upon.
The next question goes to Annette Weisbach of CNBC. Annette, please.
President Lagarde, thank you very much. I have a question on the economic outlook. You're saying that you're expecting that exports will contribute positively to economic recovery or activity, but if you look at the uncertainties in that world, how much do you think actually this is something which is realistic, given the slowness in China, given the Trump administration? That would be my first question. And my second question is whether, given that bleak economic picture and also the disinflationary trend and these restrictive monetary policy stance, why didn't you discuss or 50 basis points cut? Thank you.
Well, I can reassure you right away, we did not even utter the 2 numbers 50. So 50 was not in the debate at all. And as I said, there was rallied support at unanimously by all members of the Governing Council for 25 basis points. Your question on exports, that's an interesting one. We took the precaution in the monetary policy statement to refer to export as a potential engine for growth. Not the main one, but an additional one. And we took the precaution to say, if I recall, provided that there is no trade or additional trade friction, something along those lines. So that's in the economic activity paragraph. And then we talk about exports yet again in the risk section. And we clearly analyze the trade environment, the framework within which trade takes place, and the uncertainty associated with it as a potential risk. But obviously, there are rumors, there are statements, there are assumptions, but we don't have anything that is, clear, tangible, and can be inserted into the analytical work that staff does. So we will be looking very carefully at the numbers that come in, the information that sort of consolidates, and obviously staff will incorporate all that in the work that they are going to do for the March projections. I'm not sure that there will be, by March, enough certainty to actually be very confident. I think we will still be plagued by uncertainty in that respect, and there will be more to come. But as it comes, we will be taking that into account.
And the next question goes to Mark Schroers of Bloomberg. Mark, please.
Yes, thanks a lot. The first one is on inflation. Your confidence in reaching the 2% target is very much based on the expectation that wage growth and services inflation will slow down significantly. That hasn't materialized yet. Services inflation is still around 4%. At what point in time do you need to see hard evidence in a slowdown in services inflation to continue cutting rates, let's say, beyond March? And the second one on a completely different topic, your Czech counterpart yesterday said that his institution will assess including Bitcoin into foreign currency reserves. And US President Trump has backed the idea of a national strategic Bitcoin reserve. What do you think about such ideas? Is that something the ECB is looking into? Thanks.
Well, thank you very much for your two questions. Yes, we are confident that inflation will reach our target in the course of 25, and that's 2% medium term, sustainably so. And you are right that there is one particular item which is still resisting. The others are moving down. When you look at goods, when you look at non-energy industrial goods, when you look at subsets of all that, it's definitely moving down. And I have said in previous press conference that when goods are going down to 0.5, we're not going to expect that services will be at 2, because we would be clearly undershooting. But services, and in particular, if we look at the various underlying measurements, the domestic one, the one that strips out anything that has to do with exports, is still resisting. And has actually gone up a little bit, because on services, we were at 3.9, we moved to 4. We're not data point dependent, but we look carefully at services. And we know that, those services are largely labor intensive, with or without contact. We used to have that distinction in the COVID time. We have less of it at the moment, but it is largely wage, labor intensive, and as a result, wage sensitive. We try to measure and to understand wages as much as possible, because it is so relevant for services. And all the indicators that we have at the moment are heading downward and are confirming our confidence that wages in 25 will be going down. Whether you look at compensation per employee, which is quite a useful and relevant indicator, whether you look at the wage tracker that we have, whether we look at Indeed, whether we look at the ratios of vacancy to unemployment, all of those indicators are heading in the same direction. We're not celebrating that, but we are taking note and acknowledging the impact that it will have on services. Some of you will remember that I've also, and we have focused on the distinction between the newcomers and the latecomers. We took, for instance, a particular review and deep, tried to have a better and deep understanding of those latecomers that waited for a period of time until they decided to hike prices. That is clearly the case for insurance companies, for instance, that do not increase their prices on a monthly or quarterly basis, but they generally wait until the expiry of a contract and then they hike prices. So we will be very attentive to how the latecomers, which did hike prices in January to March 24, whether this process under which they caught up with inflation is going to be duplicated this year again. We don't think so. And we do a corporate telephone survey, the result of which you will see tomorrow, because we publish tomorrow. But our understanding from the corporate telephone survey as well, because we ask them, how do you see negotiations taking place? And when do you expect increases? all of that is heading in that direction. So it gives us the confidence that wages are on their way down and therefore will impact the price of services, and that we will see a declining movement in the course of 25. We don't expect, I think we say in the monetary policy statement that in the next couple of readings will still be resistant, if you will, largely because of base effects on energy prices. But from there on, we see this declining path in the course of 25. But once again, we don't look at one data point or one, it's not just compensation per employee. It's not just negotiated wages. It's the combination of it all, because it's a complex matter, depending on member states, depending on collective bargaining agreement and their renewal, all of that. On this matter that you referred to, and whether reserves of central bank should or could include bitcoins, I think there is a view around the table of the Governing Council, and most likely the General Council as well, that reserves have to be liquid, that reserves have to be secure, that they have to be safe, that they should not be plagued by the suspicion of money laundering or other criminal activities. And as a result, I'm confident that reserves will not enter, that bitcoins will not enter the reserves of any of the central banks of the General Council. I had a good conversation with my colleague from the Czech Republic, and I leave it to him to make whatever announcement he wants to make, but I'm confident that he's convinced, as we all are, of the necessity to have liquid, secure, and safe reserves. Thank you.
And now, Aude Kersolek of BFM Business, French television. Aude, please.
Thank you, Madame Lagarde. Are you comfortable with going on cutting rates, whereas the Fed had stopped? What impact do you foresee? And second question, if tariffs are introduced, do you think monetary policy will have to adapt immediately, or is it necessary to wait for the impacts on activity? Thank you.
Well, thank you very much for your question. I'm comfortable with one thing. We are comfortable with one thing, which is to reach our target. We are mission-driven. We want that 2% medium-term sustainable, and we will do everything that is required in order to reach that goal. So, as I said to another colleague of yours earlier on, under the baseline that we have, and with the data that we have received, we can comfortably indicate that we are directionally on this downward slope, pace and sequence of which will be determined by data and will be decided on a meeting by meeting. And for those who would like to have this solid forward guidance, it would be totally unrealistic to do anything of that nature, simply because we are facing significant and probably rising uncertainty at the moment. So this is what we have to do. And we continue to be guided by this sort of threefold analysis, which includes the inflation outlook, the underlying inflation, and the transmission of monetary policy. So are we comfortable doing what we have to do? Yes, absolutely, because we are mission-driven. The second question you had related to tariff. You know, as I said earlier on, for the moment, there is nothing that we can actually capture in terms of policy determination, in terms of numbers, in terms of scope, in terms of, custom line items to understand exactly what is considered. When that happens, then of course it will enter into our assessment and into the macroeconomic analysis that is produced by our staff. But it's far more complicated than it's this way or this way. It's inflationary or deflationary, depending on whether there is, one set of decisions with variable rates around the world, rerouting of trade, whether there is retaliation or not. All we know for sure is that it will have a global negative impact. A global negative impact.
And the next question goes to Silvia Bazzoni of Class CNBC, the Italian TV channel.
Good afternoon, President. Good afternoon, Vice President. So in the statement you mentioned headwinds, and GDP released this morning, of course, were below expectation, especially for France and Germany. So is the recovery delayed, and how long will it take to come out of stagnation? And the second question, you were mentioning before, since December, long-term yields have gone up significantly following especially Treasury sell-off. And this besides the economic divergence between the EU and the US. So are you worried, and how are you assessing the situation? Thank you very much.
Sorry, worried about what?
The yields that are going up.
Oh, yields.
Yeah.
Okay. So is the recovery delayed? First of all, there is recovery. I think that's the first thing that we have to keep at the front of our mind. We went from a very low 23 to almost double the growth in 24. Now, granted, it is not at potential yet, but it's certainly a recovery. And given the job market, given the real income increase, we have good reason to believe that consumption will pick up and will continue to support this recovery process that we expect to continue. We never talked about stagflation. Q4 was stagnation of growth, but it's one quarter. If you look at the whole year, it's a different story. So, recovery there is. Stagflation there is not. Inflation is going down, and we have recovery. Will it be delayed? We shall see. As I said, it's a process that is ongoing, and that has been quite something in the course of 24. So the yield increase, whether you look at the short end or the long end of the curve, yes, it has increased, and it's a global process. It has been predominantly in the United States, but it has spilled over across the world, and the euro area has not been spared of those spillovers. It's largely attributable to spillovers from the US, not only. Partly because of energy prices, but also for other reasons. There is probably less of a downside risk expectation concerning inflation on the part of the markets, which probably explains partly this yield increase. But as I said, largely spillovers, partly euro-specific. But it doesn't stop our monetary policy from transmitting quite materially. When I look at the decline of interest rates for corporates, the decline of interest rates to households for mortgages, it is really channeling through into the economy. And when I look, for instance, at the consumer survey and their intention to invest, there is clearly an added demand on the housing sector, for instance. So more to be seen on that front, particularly fueled by lower interest rates.
And now Olaf Storbeck of the Financial Times. Olaf, for you, please.
Thanks a lot. I have a few questions on the natural rate debate.
Not
Two.
few.
Can you give us any idea of your views on how the ECB will decide when we are there? So conceptually, will you just take the mid-range of the star forecast, or have you already discussed how to determine that? And do you have any views on the question, as we are getting closer to the level, wherever it is, will the reaction function of the ECB have to change in terms of, do you have to act more slowly, or kind of take more time to see how monetary policy actually works? Thanks.
It's a nice question, but let's face it. We are currently restrictive. We are not at neutral rate. This is a debate that is entirely premature. When we get closer to that, we will operate on the basis of a staff research paper, on the basis of the analysis provided by staff, and then that will help us determine how close we are and what our monetary policy stance should be. If you're asking me today whether we should go below neutral rate in order to stimulate the economy, I cannot tell you that. That's pretty obvious. We decide meeting by meeting on the basis of data, and we are not pre-committing to any particular pace. So how could I tell you if and when we arrive at this conceptual principle of the neutral rate, what we will do afterwards? This is going to depend on the data that we receive.
Stefan Rechius of Handelsblatt. Stefan, please.
Oh, by the way, we will be also, I know staff is going to work very hard on models, but we will be looking at all sorts of information, intelligence, the famous reference to looking out of the window. We will also be looking out the window.
Thank you for the floor. Here I am.
Hi.
Hi. You had a dinner guest on Tuesday evening, which, if I'm not mistaken, was the first time. Could you walk us through the exchange with Ursula von der Leyen and what you talked about and how it feeds or fed into the deliberations of the Governing Council? And my second question, if I may, is on the withdrawal of the Fed from the NGFS. The timing was delicate, just days prior to Donald Trump taking office. Did this exit surprise you, either in substance or in timing? Did you expect it, and what does it mean for global cooperation of central banks? Thank you.
Well, thank you for the two questions. President von der Leyen honored us with her presence at dinner on Tuesday. She was not the first one to attend what I, very immodestly call the president's dinners. Pascal Donoghue, the president of the Eurogroup, had also attended one of our dinners. And it was a very rich experience, which all governors felt could be repeated with other guests from around Europe. So I was particularly grateful to the president that she came, despite the crazy agenda that she has. Let's face it, this week is particularly heavy for her, and she managed to come. It gave us a chance to understand better from her expose, her remarks, what exactly the Commission was going to focus on in terms of competitiveness, in terms of simplification, in terms of keeping the goals but being flexible on the approach. And I think that she was herself, but she can speak for herself better than me, pleased with the exchange that we had, because it took the form of her explaining the policies considered by the Commission in order to restore the competitiveness, in order to incentivize innovation, in order to eliminate some of the red tape, and so on and so forth. But it was also a chance for her to hear from the governors what their concerns were, and to check facts and policy recommendations. So it was, in that respect, really an interesting dinner. And there will be more of those, as I have other guests up my sleeves, which I'm not going to disclose at this point in time. Now, you asked me a question about the withdrawal from the NGFS. The NGFS includes, I think, over 150 countries around the world. We are an active member of the NGFS. We actually provide the scenarios that are used by the NGFS and most members, and we see huge value in this multilateral, comparing of notes, comparing of scenarios, comparing of risks, comparing of policies. I think in this day and age, having a multilateral setting where these issues can be debated and analyzed is of great value. I'll stop here.
And the last question today goes to Elena Savova from the Bulgarian news agency. Elena, please.
Thank you. Good afternoon, Madam President. I have two questions. First, you mentioned rising real incomes. How far is this process gone comparing the levels pre-pandemic levels? And my second question is related to Bulgaria. Bulgaria is preparing to ask for extraordinary convergence report. Do you have recommendations for easing this process? And eventual extraordinary convergence report, would it be focused mainly on the technical criteria for entering the Eurozone, or it will take a more comprehensive approach about policies, about legislation again, like the released in June?
Right. I beg your pardon because I missed the first part of your question. The second part I registered on Bulgaria, the convergence process and all that. But on the first one, what was it?
The real incomes.
Oh, real incomes.
Yes. Okay. How far are they gone comparing the pre-pandemic levels?
Yeah. Okay. Okay. So on rising real income, it's a fact, and in many member states there has been a complete catch-up with pre-pandemic levels. What has been different from pre-pandemic levels is the level of savings. And the level of savings has increased, has varied over the course of time, but in net terms has increased. And we very much hope that if confidence can be restored, particularly, in view of a degree of anxiety and uncertainty about European political development, for instance, that consumers and investors will restore their previous pattern of consumption and investment. On Bulgaria, there is a convergence process that is well advanced. We are marginally involved in the process because we do not pass judgment on anything else than convergence towards inflation, and we look at the fiscal position and the sustainability. But on those fronts, and from what I have seen and the discussions that I have had with the Bulgarian authorities, I'm confident that this process is going well, and the special convergence report that has been asked by the Bulgarian authorities will, I suppose, it's not my decision, it will be determined by the Commission, will proceed so that there can be a review of all the criteria, not just inflation, but all the criteria that Bulgaria has to satisfy. So I'm only giving you a partial answer because the rest can only be given by the Commission.
Thank you very much. That concludes our press conference today. We will be back on the 6th of March, and until then, I wish everybody all the best. Thank you.
Now that was ECB President Christine Lagarde. Let's bring in now Bloomberg's Lizzie Burden, who's reporting from Frankfurt on the ECB. And it seems like some of the operative statements here, Lizzie, had to deal with the premature nature of discussing when to stop cutting rates and the whipsawing that there might still be an inflation. Yeah. What did you take away?
Yeah, she says it's premature to discuss where to stop cuts. She also says that having a debate about how to behave when they're approaching neutral is premature as well. So really batting away the questions about the path ahead. But it seems pretty obvious there's going to be a cut in March, because she did notice that by then they'll have 2 more inflation reports and the updated economic forecasts as well. Of course, we know they'll also have the results of the German election, and there should be more idea about Trump's tariffs on Europe, if there will be any. But so now it does seem that the focus has switched from too high inflation to too low growth. And I say that because Lagarde also said economic activity is set to stay weak in the near term, whereas she was more optimistic on inflation. She said that uptick to 2% that we saw in December was expected, and even if services inflation is high, it looks like wage pressures are easing. Interestingly, if you look at the market reaction, there was hardly any to the actual decision. And then when Lagarde was reading out the statement, you actually saw the euro erasing its losses against the dollar. So she wasn't actually telling anyone anything new. And when I asked our FX team about why this is happening, they say it's probably just the month-end flows hitting the market. Maybe it's a bit of bears trimming their shorts because the ECB hadn't given them a new catalyst, but not a lot to see here in Frankfurt today. April seems to be the real battleground meeting.
Lizzie, we thank you so very much. Of course, that's Bloomberg's Lizzie Burden reporting from Frankfurt on the ECB. Now, the market is open here in the United States. We're going to get a check on the major averages now because, of course, you are shaking off any softness in those big tech earnings. Even with Microsoft down, you are seeing the NASDAQ 100 looking to rise. You have Microsoft now down 6% at the open. Meta is on the rise still. Investors really liking their CapEx plan. Tesla up 4.6%. The solid earnings report from Mark Zuckerberg and the prediction that AI will reach over 1 billion people and become the most widely used in the industry has investors excited. Microsoft, though, struggling to build data centers fast enough to meet AI demand, forcing growth to slow. For Tesla, people are looking past that big outlook, and instead they're focusing on a promise to launch a robo-taxi business in June. Some of the biggest performers right now in the NASDAQ 100 include Broadcom, Lam, people liking the AI spend here, David.
And Elon's bullish, just making it hard, I think, for people to see those data in earnest. Also keeping an eye on IBM, which projected strong revenue growth in the new fiscal year, citing AI sales above $5 billion since the middle of 2023. And after the bell today, we'll get earnings from Apple and from Intel. Apple expected to report record results despite a drop in sales out of China. Bloomberg Technology co-host Caroline Hyde is here to break down all these tech earnings, starting with Meta, Microsoft, and Tesla. Let's look back before we look forward. What is your biggest takeaway here, Caroline? There's a lot of talk, of course, about DeepSeek and the earnings calls that we've heard thus far.
And both of them, Satya and Mark, had positive things to say about DeepSeek. Look, they're trying to find the silver linings to all of this. Microsoft going as far as to be actually offering R1, the model within its AI foundry, if you want to be going on to Azure and actually developing that model yourself. But Azure was the weak point for Microsoft, and that's why they still have to spend. Azure saw 31% growth. This is where their AI and the generative AI offerings lie, and it's down sequentially quarter on quarter. Still a lot of bookings coming from OpenAI-related offerings, and that really caught some analysts' attention, but it wasn't strong enough, and the key issue is capacity. They don't have big enough data centers. They can't support it. We know that's why OpenAI had to go to Oracle for some of its cloud computing in the future, so that's why they're still committing to $80 billion.
What do you make of the Microsoft weakness in cloud growth here? Because you are seeing Microsoft really drag down the Magnificent Seven today.
I know, and actually it's the worst day for Microsoft since October, so a significant drop. We're now at the lowest since November. They actually beat on their fiscal second quarter. They actually saw 12% growth in revenue. They saw earnings on the upside, but it really was the fact that the Azure within that wasn't living up to expectations. So Amy Hood talking about discipline as well. So I think that was sort of injected there. Look, we're spending, but we're spending wisely. Meta on the other side is saying, we are committing to spend and spend big because we want to be the #1 open source model in the United States. He's going all in on AI. AI engineers they're talking about as well, but already they are getting return on AI. You're seeing advertising become more bespoke, and that's why they can continue to deliver revenue. They're at a record high today.
5 p.m. Wall Street time, I guess 2 p.m. in Cupertino, we get results for Apple. There has been so much speculation about the hit that we've seen or seen telegraphed in iPhone sales.
Yes.
What are the expectations for those results when we get them today?
As you mentioned, record results and what is anticipated. This is largely coming from services, and still the iPhone is the dominant source of revenue growth. Revenue is going to eke up about 3% overall when you're looking at the quarter. We want to get into the real nuts and bolts of how weak is China, how fast is it slowing, what is the impact of Huawei and local competition, but also how can they steer us to a future of Apple intelligence where perhaps DeepSeek has been a help for them there. This drives down the cost of these overall large language models, makes it easier to be using and therefore cheaper to be offering. I think Apple's going to be a key one overall for whether or not we've still got that resilience in the AI offering and whether they can play catch up.
Thank you, Caroline, so much. We're excited for the show. Of course, you can catch Caroline Hyde at Bloomberg Technology today at 11 a.m. Eastern, breaking down what we're seeing out of big tech results, looking ahead to Apple. Joining us now, FL Putnam Chief Market Strategist Ellen Hazen. You see the numbers that we have so far. You see the dispersion brewing within the Magnificent Seven. What do you like at this point, now that there are new winners and losers?
I think it's really difficult to extrapolate too much from one day. We saw so many of these semiconductor companies really go down dramatically on Monday, and then look at them now. They're pretty quickly regaining a lot of that loss. Today we're seeing Microsoft down, as you mentioned. on the CapEx, but I wouldn't be surprised to see that go up as well. Tesla started last night after they first reported down, and now it's up. So I wouldn't read too much into the after-hours trading or the single-day trading. I think these things can change a lot. I think the important thing to do is to look at earnings growth expectations for this year and for next year by sector and company by company. And what we see when we look there is that the earnings growth is broadening out. We do like the Mag 7 still. There's no question that they have outstanding organic growth. But at the same time, you're seeing earnings broaden out into financials because of the steeper yield curve. You're seeing earnings broaden out into industrials. And so we look at the Mag 7 as still very solid investments, but we think it makes sense to diversify a little bit into some of the other 493.
Ellen, I'm very curious just sort of how you look at what happened on Monday as a catalyst, look at the kind of shape of that. And you mentioned Magnificent Seven, so much of that has been tied into AI. And I wonder how much the event, the advent or the awareness of DeepSeek sort of prompted you to think differently about the role of AI, how things are changing, how much staying power, I guess, are the events of Monday going to have?
I would say a couple things about the events of Monday. The first is that when you go into a year with the S&P up 25% and many of these stocks up 50% or 100%, then you're at risk of any negative catalyst. And this happened to be the catalyst, although, as you know, the data had been coming out since December. It wasn't entirely brand new over the weekend. It's just that attention became more focused over the weekend. So anytime you have very expensive stocks, they are at risk of weakening. And the other thing I would say about it is I've been looking at tech for a long time, as I know you and your colleagues have. When the price of something goes down, standard economics says that demand goes up. And it's coming out that it looks like maybe these are not apples to apples cost numbers. So I don't want to say that they're true, but let's just say they were true. Let's say that the cost of inference and training might be 95% lower than what we thought a week ago. Well, if that's the case, I don't think the spending is going to be down by 95%. I think what will happen is people and organizations and companies will find ways to use up the same dollar's worth of compute power, and it will just accelerate the AI transition. It's just like, we have so much more memory on our phones than we did 10 years ago, or on our computers than we did 20 years ago, and yet we still use them to the max. The same thing is going to happen with AI. Could there be an air pocket? Yes, of course. Could there be a dislocation? Yes. But ultimately, this is a really powerful technology, and the usage is going to go up commensurate. And if it's cheaper than expected, then the usage will just go up that much more.
I think it's interesting to sit here on a day where you see Microsoft falling the most since October, the NASDAQ 100 still rising, Broadcom being a major beneficiary here. Broadcom's biggest customers, of course, include Meta, which has huge spending plans. When you think about the winners and losers of the spending boom, even if you think that spending boom is at risk, who are they?
I think from the chip side, it's definitely still NVIDIA. It's definitely still Broadcom. No question about that. And we own both of those stocks. I think that what we are seeing, though, is if and when, and it's probably more a question of when, you begin to see the hardware be less of the bottleneck and the hardware becomes cheaper, then what will happen is the software companies that are building on top of that are going to benefit. So it's just like if you think back to the tech bubble, right? Those of us that remember that, you saw fiber, and at first the tech bubble was all about Cisco and Corning and the companies that were doing the hardware. But who were the real internet winners 5-10 years later? It was companies who built on top of that, companies like Amazon, companies like Facebook. And you're going to see the same thing here. So you're going to migrate toward the cloud providers, and you're going to migrate toward software as a service companies that are providing enterprise-wide software solutions for companies on top of that cheaper hardware. So in the medium to long term, that's where we're going to end up. But in the short term, we absolutely still do believe in the chip need. That's not going to change.
Ellen, lastly here, I wonder sort of how wide you're widening your aperture. So you mentioned you're interested in looking at the S&P 493, kind of looking beyond the Magnificent Seven. How about small caps? There's been such a loud and growing louder chorus of people saying small caps are where it's at, or increasingly so.
We really don't like small caps very much at this point, and let me tell you why. It's for the same reasons I said when I look at earnings for the fourth quarter that are coming in. When we look at small cap earnings forecasts for the S&P 600 or for the Russell 2000, they're still declining. I'm not saying that the earnings are down year over year, but the earnings estimates for 2024 are going down. The earnings estimates for 2025 and 2026 are going down. And the earnings estimates for both the Mag 7, but also the other 493, they're going up. And at the end of the day, as a fundamental shop, we believe that stock prices are correlated to earnings. And if earnings are going up, then those stocks are going to do better. And we are not going to be interested in being materially overweight small cap stocks until we see the earnings estimate declines stop and ideally begin to accelerate in a positive direction.
Ellen, we thank you so much for joining us today. Big earnings day. That is FL Putnam's Ellen Hazen. Some other movers we're watching this morning, a lot of messiness under the surface. Cigna is dropping on a profit miss due to higher medical costs. A big theme, David, that we're going to be watching throughout the Trump administration. We're also watching ServiceNow sales outlook disappointing. MasterCard beats estimates, so you are seeing a little green on the screen in this earnings season. MasterCard up 4%. The big story, I think, is really UPS, a really stunning move there.
Yes.
It's down almost 15%. This is one of the worst days. I believe the worst day they've been having since 2008. And a lot of this is due to losing a potential relationship with its largest customer, significant contract. They didn't cite that it would be Amazon, but it's something that investors are gleaning and analysts are certainly asking about.
Certainly something they're worried about. And I think overlaying all of this, too, is just the uncertainty about policy that we've talked so much about. Healthcare policy, as you mentioned, when it comes to that, but also just tariffs policy, trade policies. We get incredibly close to that deadline that the president has put in place of February 1st, Saturday of this week. I mean, we'll see what happens then, but I know folks in Canada, Mexico, and companies, of course, doing business with those countries and China, extremely worried about what could happen.
You know, it's interesting. There's a tariff policy, and we'll run some of this tape later. We spoke to John Gray about it as well. A lot of companies, a lot of big investors like him, not yet changing course because they don't know what to expect. I do see that politics are already impacting things. You were kind of nodding when we showed Cigna up there. It would be interesting to see if we could pull up a board also about the other big health insurance companies as well. As we know, those drug price negotiations are also causing a big impact to drug companies and providers, healthcare providers alike.
Totally, and I returned to what we were talking about with Caroline Hyde just a few minutes ago, this moment that we're in, kind of looking at these big tech companies which have had so much promise and so much enthusiasm and exuberance around them for so long here, and the degree to which, as we talked about, there has been an eagerness for commentary from those executives on what we saw with DeepSeek earlier this week, and I think all of us still processing just the magnitude of the moves that we saw on the heels of that kind of revelation about what that Chinese company had been able to do, but also still, I think, a level of circumspection, eagerness to kind of determine what has that model actually done, what is it able to do, how transferable is that going to be, and then picking up on something else she said too, just how that's going to be mimicked or will enhance the models that we've seen so far.
We'll talk so much more about that on the show, but as we promised you, that Blackstone tape, Blackstone had delivered a beat for fee-related earnings, had one of its best ever quarters in history. They're also set for a New York comeback with the purchase, according to Bloomberg News, a purchase of a Midtown Manhattan tower. I spoke with COO John Gray about CapEx concerns in the data center business in particular, off of DeepSeek. Listen.
It was a terrific quarter for us. Distributable earnings up 56%. The key drivers were the things that really are essential to our business, which is fundraising, investing, realizations, all at the highest level in 2.5 years. But I think the bigger picture stepping back is what's quite exciting. We're seeing a real sea change in terms of openness towards alternatives, towards private assets. And you see that in the individual investor space, what we call private wealth. We had an 80% increase in inflows last year in this area. In January, just now, was the best month since May of 2022. Investors really appreciate the premium returns there. And then I would say private credit with insurance companies, with pension funds, with individual investors, the ability to bring up those investors right up to the borrowers, capture some additional yield, that's really paying off. And if you look at our corporate real estate credit assets together, they've grown from $176 billion 4 years ago to $450 billion today. We do that as a pure investment manager, and we just continue to see a lot of momentum. So a great quarter, but it's really this sea change that excites me in the outlook as we go forward from here.
We'll talk more about the sea change that you're seeing, but I do want to go right to one specific business, the data center business, because Blackstone is one of the biggest owners of data centers across the country. Of course, the claim by China's DeepSeek that they could now do this much more efficiently in terms of capital expenditures. Investors are now very concerned about the infrastructure that's needed to fuel the AI boom. Did you call up your clients after the weekend to see whether they might be spending less, and how might this be impacting you in the longer term?
We absolutely spoke to those clients because they're essential in the business. And I would just describe sort of where we sit in data centers. We are the largest investor. We've got $80 billion of leased data centers around the globe. The good news is they are long-term leased to major companies, and we don't build these centers speculatively. So it's a very prudent approach. The question, though, coming out of DeepSeek is, what does it mean for demand going forward? And I'd just start by saying what we've seen from other, people talking about this, which is the price of compute is coming down and the usage is obviously going to go up. And when that happens, we still think there's going to be a vital need for infrastructure. Microsoft and Meta on their calls yesterday talked about fungibility. They said we still need physical infrastructure. In fact, Mark Zuckerberg said he thought it was a strategic advantage, but they said maybe there's less in training, there's more in inference, maybe there could be more in cloud. So I think as we see more and more adoption of AI, there's going to be more and more demand for compute power. It will happen in data centers. The form of it may change a bit, but we still think it's essential, as is the energy and power, which we think will continue to be needed. So we're going to continue to operate in a very disciplined way. We're going to build when we have demand from our tenants. It feels like it will continue. The form of it may shift a bit.
How might you see this impacting others? Because the reality is you have a lot of Wall Street that followed you into this trade, many other private investors looking to help build data centers. Do you think that there are mistakes being made?
Well, so far, I would say not, because we haven't seen speculative building, right? You don't go out and build $1 billion data center if you don't have a tenant, you don't have power. It's not like building condos in Miami and you're sort of betting on an overall market. It's very specific. There's a relatively small number of major tenants, so we haven't seen an overbuilding. It may give folks some pause. There may be a little less capital flowing into the sector as people wait to see where this settles out. But from our perspective, we're going to continue to look at the demand signals from our tenants. And if they need this, we think we're uniquely positioned with QTS in the US and Europe and with Air Trunk in Asia. We think we're set up well to serve their needs at scale, to deliver them timely what they want. And so we're going to continue at it. We'll see what others decide.
That was Blackstone Chief Operating Officer John Gray. And this is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Well, authorities say the collision between an American Airlines regional jet and a military helicopter near Washington's Reagan Airport left no survivors. Bloomberg's Tyler Kendall is in Washington with the latest. And Tyler, there was a briefing this morning in which the investigation was discussed in some detail. Where do things stand, and what can we expect to learn here as the day goes on?
Yeah, good morning, David. There are hundreds of first responders here on the ground at DCA as this search mission continues. As you mentioned, officials told us reporters in a briefing earlier that this unfortunately has moved from a search and rescue mission to a search and recovery mission. Officials say that 27 bodies have been recovered from the Potomac River. We know that 64 people were on board the commercial airliner and 3 people were on the U.S. Army Black Hawk helicopter when those 2 aircrafts collided. But questions still remain about how this happened. Now, newly minted Transportation Secretary Sean Duffy said that this could have been preventable and that there were clear skies and that ultimately both of these aircraft were on normal flight patterns. So we are waiting for a briefing from the NTSB to see if we could get any further information there. But officials are trying to assure the American public that the skies are safe to fly. DCA is expected to open normal operations starting at 11 a.m. Eastern. David, this is the first time in more than 15 years that there has been a deadly crash of a U.S. commercial airliner.
We also know that this comes just days after both Sean Duffy was confirmed as the head of the Department of Transportation and Pete Hegseth being confirmed as Defense Secretary. We also know now, according to the White House press secretary, that the president's press briefing will be at 11 a.m., which is around the same time that we understand that the airport is going to reopen. How do you expect the administration to handle this, especially given that there are multiple investigations going on, including from the Pentagon?
Right, exactly. So we know that Pete Hegseth has been briefed on this, and we know that the president is receiving routine updates when it comes to this. I did catch up with the American Airlines CEO, Robert Isom, who said that he also has been in touch with the White House, although declined to say whether he has been in direct touch with President Trump. We know American Airlines is sending 100 personnel here to DCA to help assist with the families of the victims. But there are other questions about how the federal response is going to evolve, considering that at this moment there is not a confirmed FAA administrator. The last FAA administrator, Michael Whitaker, gave his resignation on January 20th, the day of Trump's inauguration. We know that our Bloomberg News team is chasing who his replacement could be and whether or not that could be fast-tracked as this disaster and the investigation unfolds.
Tyler, we thank you for your reporting, of course, outside of Reagan International Airport. That is Tyler Kendall in D.C. Stick with us. We have more markets ahead, more coverage for you, and more updates, of course, on the very sad day in Washington. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. All are feared dead after an American Airlines flight from Wichita and an Army helicopter crashed near Reagan National Airport last night. Correspondent Steve Kathan begins our coverage.
At this point, we don't believe there are any survivors.
John Donnelly, chief of the Washington Fire Department, says it's now a recovery effort in the Potomac River after the collision of an American Airlines regional jet and a U.S. Army helicopter. Donnelly was asked about getting to all of the 67 victims.
I'm confident that we will do that, and that will take us a little bit of time, though. It may involve some more equipment.
Both aircraft have been located. At least 28 bodies have been pulled from the Potomac so far. Transportation Secretary Sean Duffy.
To back up what the president said, what I've seen so far, do I think this was preventable? Absolutely.
Officials say the 3 soldiers killed on the Black Hawk chopper were on a training mission. Defense Secretary Pete Hegseth.
It was a fairly experienced crew, and it was doing a required annual night evaluation. They did have night vision goggles.
CBS News aviation analyst Robert Sumwalt.
Obviously, something broke down yesterday, and the real challenge right now is to find out what happened so we can keep it from happening again.
Among the victims, 6 members of a figure skating club from Boston, 2 of them teenagers. A Senate confirmation hearing is underway for President Trump's controversial pick for FBI Director Kash Patel. Judiciary Committee Chair Chuck Grassley.
I know you know this, but it's your job to restore the public trust and return the FBI to its core mission of fighting crime.
A confirmation hearing just beginning for Tulsi Gabbard, Mr. Trump's nominee to head up national intelligence. A hostage prisoner swaps on hold in the Middle East. Hours after 3 Israelis were handed over to the Red Cross, 2 of them amid chaos in northern Gaza, where they were jeered by an angry crowd, Prime Minister Netanyahu has halted the planned release of 110 Palestinian prisoners today. The BBC's Yolande Nell from Jerusalem.
The job is really for international mediators to step in once again quite urgently to stop this ceasefire deal from being derailed.
Here in the U.S., the economy grew at a healthy 2.8% last year, slower than last year's 2.9% GDP. Analysts say, though, it's still solid thanks to consumer spending and low unemployment. There are fears potential trade tariffs could lead to higher prices. Dow's up 61. This is CBS News.
Visit OptimaTaxRelief.com.
Musicians will be out in full force in L.A. tonight.
The biggest names in music will come together tonight for Fire Aid, a massive concert to raise money to support Los Angeles' recovery from the recent wildfires. It's a star-studded event including performances by Lady Gaga, Billie Eilish, Stevie Wonder, and a ton of others. All the proceeds from Fire Aid will benefit those affected by the fires. And Clippers owner Steve Ballmer and his wife will match all the donations that are made during the live broadcast.
CBS's Stacey Lynn. Mark your calendars, Squid Game fans.
I promised myself 2 years ago that I'd burn it all to the ground.
Netflix says the third and final season will premiere on Netflix June 27th. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast Live. Alex Steele, Paul Sweeney with you. A busy news day, of course. We're going to stay on top of the news of the day. Tyler Kendall, Bloomberg News reporter, the latest from the plane helicopter crash in Washington, D.C. Kit Darby, president of Kit Darby Aviation Consulting, will give us his thoughts on what he thinks may have occurred down there in Washington, D.C. Henrietta Trez is going to join us from Vega Partners, give us the latest on some of the D.C. policy issues going on there. And then at around 10:25, we're going to dip into the hearing to examine the nomination of Tulsi Gabbard of Hawaii to be the Director of National Intelligence. We'll take that, the Q&A. And then around 11 a.m., President Donald Trump is scheduled to deliver a press conference on the plane crash in Washington, D.C., and when he does, we will bring that to you as well. Right now, let's kick it all off with John Tucker and get a Bloomberg Business Flash.
All right, guys, good morning. Stocks pushing higher, and thank you, U.S. consumer. Consumer spending, the major driver of growth in the latest GDP report. Consumer spending surging to 4.2%. In the S&P 500, 10 of the 11 major industry groups are higher, being led by communication services. That's where you find shares of Meta. They were up over 4%. CEO Mark Zuckerberg exuding confidence in his company's AI strategy. He says 2025 is going to be a really big year in which his AI assistant will become the most widely used in the industry. A worst performing individual stock of the S&P 500, you talked about it, United Parcel Service, down right now 15.5%. The company, among other things, planning to slash its Amazon business by half. S&P 500, 17 points higher. The Dow up 58 points. The tech-heavy NASDAQ 100 right now up 53 points. Well, let me bring you this headline from Europe. The ECB cutting rates for a fifth time. The Eurozone economy flatlines. And as a result, the German two-year yield, that right now comes in at, well, falling 10 basis points, the two-year. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul, Alex.
All right, thanks so much, John Tucker. Also should point out the German two-year yield falling 10 basis points on those ECB easing bets.
What did I say? 10? Did I say it wrong?
No, you didn't, but didn't you just... Did I miss when you said that?
Oh.
I thought you had the euro.
Correction.
I thought you had
I'm
the
glad
euro.
she listens.
Yes.
But I listened when you talked about the euro. Anyway, this bodes well. Okay, so it is about 10 o'clock. In about an hour, Reagan International Airport will be resuming operations. At the same time, President Trump will be holding a briefing on the crash for 11 a.m. We want to get more here. Tyler Kendall, Bloomberg News reporter. She's standing by on site from Reagan Washington Airport. Hey, Tyler, what is it like on the ground right now?
Yeah, good morning, Alex. There are hundreds of first responders here at DCA as they continue the search missions. Officials told us, reporters earlier at a briefing, that this has moved from a search and rescue mission to a search and recovery mission. They are not expecting any survivors from this crash. We know at least 28 bodies have been pulled from the Potomac River. We know that 64 people were on the commercial airliner and 3 people were on the U.S. Army Black Hawk helicopter when the aircraft collided. Now, officials are trying very hard to reassure the American public that their skies are safe to fly. As you mentioned, Reagan expected to open here at 11 a.m. Eastern. There have been a few delays and cancellations, but more or less trying to reopen the doors to allow travelers in. But there are many questions that are being raised, as Transportation Secretary Sean Duffy confirmed just this week, said that this tragedy could have been prevented.
Tyler, you mentioned 28 bodies have been recovered. Is there any reporting on kind of how they believe the pace of those additional recoveries will take place? How difficult will that be in the conditions they're dealing with?
Right, we have to remember that Washington experienced a freeze last week, so it froze the Potomac River, which has also complicated search and rescue missions. And officials said that heavy winds overnight also expanded the search area, which is complicating matters even further. But officials say that we should expect an NTSB briefing later this afternoon. They are the ones that have been leading this investigation, and hopefully we'll have some more details going forward.
All right, Tyler, thank you so much. We really do appreciate your reporting. Tyler Kendall, Bloomberg News reporter, joining us from Reagan Washington Airport. And as a reminder, that airport should open at 11, and President Trump will be giving a briefing as well. We'll take that for you. Want to get more on this with Kit Darby, president of Kit Darby Aviation Consulting on this. Kit, it's so interesting when we hear from officials that the helicopter crew was fairly experienced. Sean Duffy saying the crash was absolutely preventable. What are the questions that you have right now?
Well, thanks for having me. The first thing, of course, the primary charge to pilots on both sides, both aircraft and helicopter, in VFR conditions, which, without clouds you're able to see, is to see and avoid. So in this case, one complicating factor is that the communications to the helicopter and the airplane were on different frequencies. So the situational awareness would go down a little bit, especially for the airliner, not knowing that the tower was talking to this other aircraft. The vision requirements, see and avoid means you can see. We've learned just recently that the helicopter was using night vision goggles. So those are designed to allow the helicopter to operate in very low light situation without any extra illumination. But it also limits the field of vision, and it has a tendency, if you do get a bright light, to bloom or to obscure what you're looking at. So at least one of the pilots in that aircraft, perhaps the one on the side of the airliner, since it came in from the side, could have been using night vision goggles, could have had a vision problem. But even without the night vision goggles, we're looking at a light at night. So it's easy to see the light at night, but it's hard to tell what that light's doing, how fast it's going, where it's going, climbing or descending. So it's a very difficult, against the backdrop of city lights, to know what you're seeing, either with or without vision goggles.
Kit, based upon your experience, how long do you think it will take the NTSB to figure out what happened and be able to communicate that to us?
Well, if the voice recorder and the flight recorder are found and available, and I would expect them to be in good shape, we'll have a lot of information very quickly. The preliminary report should be accurate within a month or so. And then, of course, the full report often takes a year or more. But the preliminary report, with the information we have, video evidence, flight recorders, voice recorders, eyewitness reports, we're going to know what happened here pretty quick.
As we turn towards Reagan reopening at 11 a.m., there have been a lot of questions from the press to officials as, is it safe to fly? What kind of precautions in this kind of scenario would be taken to ensure that?
Well, this is extremely rare, almost random. A reminder that we fly people regularly at 600 miles an hour at 30,000 feet coast to coast, 20 times safer than we drive ourselves to the airport at 60 miles an hour. So, I mean, this is a wonderfully safe system, 30 million flights worldwide. Some of our major airlines have 1 million flights, one airline, 1 million flights a year. So there is regrettably a big exposure when we have that much activity. And this particular airport, very congested, all the military services, many of the airlines operating in very close proximity. This would be a likely place for something to happen, but for another accident like this to happen, very, very rare, and certainly shouldn't discourage anybody from getting on an airliner and going where they need to go. The odds are, below a lightning strike.
Right. Kit, I guess what I've learned this morning, I think a lot of our listeners and viewers have learned as well, is a couple of things. One, just how busy the D.C. airspace was. I just kind of figure if it's not New York, L.A., Atlanta, it's okay. But A, it's very, very busy. And B, the mixture of commercial and military, I kind of feel like makes D.C. airspace a little bit unique. How concerning is it, or what precautions do you think are taken in that airspace for, again, military and commercial to be in such close proximity so often?
Well, there are a lot of rules. I mean, I've flown military aircraft in that airspace, although I was flying airplanes, not helicopters. And it was very, very congested. However, there are rules that separate airplane from helicopters, commercial from military, and those rules are followed every day, thousands of times, very successfully. Something didn't work here. I mean, the last thing they said was, I have the aircraft in sight, and the question is, how do you hit something you see and have agreed to avoid? I'm not sure the airliner would have had the helicopter in sight, but there's a real quandary here about we know the rules, and the rules were being followed right up to the last minute, and then something broke down. So confusing for me, and I don't know that anybody could make sense of it yet, but soon.
Kit, I think for you and everybody else, also confusing. You've been in this industry for over 30 years. Can you give us some context? You gave great color in terms of what it's like to use night vision, different frequencies. How hard is it or easy is it to move a helicopter going 100 miles per hour?
It's pretty maneuverable. Helicopters do things that airplanes don't do, and that they can hover and go very slow. But when they're flying, cruising, they're very much like an airplane. And both of these aircraft would be very maneuverable. If they saw each other and understood the relationship, speed, distance, what needed to be done, they're both very maneuverable and could have avoided each other with the right visual information. I would equate this to driving at night, how much less you see at night than you do in the daytime. And that's part of the problem here, I believe, is they're knowing what to do with what they see. Helicopter probably had the aircraft in sight. Airplane probably did not have the helicopter in sight.
Very good. Kit, thank you so much for joining us. Kit Darby, President, kitdarby.com Aviation Consulting, giving us some informed views and perspectives on aviation, some of the challenges that might have been before these two aircraft as they unfortunately crashed in Washington, D.C. overnight. We'll have continued reporting on that throughout the day. Let's switch gears and get back to these markets. Again, the S&P is up about 16 points. The Dow's up 68 points. The NASDAQ's up about 17 points. So a slight lift to the market. Sylvia Jablonski joins us. She's the CEO and CIO of Defiance ETFs. Sylvia, we're coming off, two great years in the stock market, 23 and 24, with north of 20% total returns there. And we start off with a nice January in terms of performance here. What are you telling your clients these days about their expectations for 2025?
Yes, good morning. Well, I think 2023 and 2024 are going to be hard to beat, right? They're pretty epic years, but I do think, though, that, we're in a good position here economically. We have 2 to 3% GDP growth. Inflation is kind of coming down, although we've seen some blips. It's arguably coming down and remaining steady at the moment. Jobs numbers are decent. The inflation figures that we've seen recently are pretty decent. Strong consumer. Corporate earnings are going to be interesting this time around, but thus far have been, strong the last 8 quarters or so. And so I think that we stay the course here, right? I think the last 2 years have proven to us that maybe it is time to get off of the sidelines. And, when you have like these big dips, like we saw from the DeepSeek debacle the other day, you kind of go in and you dollar cost average, and these are your opportunities to be long equities and get performance. But to answer your question a little bit more specifically, I don't expect a 20% year, but I do expect lower double-digit returns this year.
What do you make of the market action moves on earnings? I mean, without talking specific names, just the drop in UPS, the drop in Microsoft, like Cigna, like it's not taking a lot to get really beat up. Can you put that into perspective for that?
Yeah, I think it almost feels like last season, right? Where good news was a little bit of a drop, neutral news was a really big drop, and anything that was shy of expectations was just like a complete tank, right? I think that the market just has very high expectations for earnings right now that are, somewhat unreasonable, right? I think we got a little bit of kind of like the fire and the tailwinds from AI and kind of this idea that the Fed was going to be cutting rates and things like this. I think, last year was super strong on that. And I think we're kind of steadying out now. And so these earnings, particularly from the Mag 7, they're going to start tapering off. I think we're going to continue to see positive earnings, but maybe it's not going to be, 100% year over year on some of the names. Maybe it's going to be 30% year over year, which is still very solid. I think we just have to reframe our expectations on this.
Sylvia, as CEO and CIO of Defiance ETFs, where are you seeing the flows into your ETF complex these days?
Hands down, it's been in quantum computing. I would say that the 2 most popular trades were MicroStrategy, and that's really a crypto play, right? So you get Bitcoin exposure through that. But quantum computing has just been, an unbelievable story for our firm and for the markets, right? I think it's this idea of it's like the next generation of AI, the 4th industrial revolution. In order for machine learning and AI to actually work, you need supercomputers, and quantum computing has this ability to kind of transform that field, but also just drug discovery, pharmaceuticals, medical research, cryptography, all of these different types of sectors that need essentially an upgrade with technology. And so a lot of those quantum names this year, like IonQ, Rigetti, and I know that they've fallen back like post Jensen Huang a little bit, but I think it's kind of back on the up and up because people realize that this is a technology that's going to bloom and flourish. And we saw about $1 billion of assets come into that space, and it's been out since 2018, and it kind of did nothing, and that's where the flows came this year.
Sylvia, we appreciate you. Thank you so much. Sylvia Jablonski, CEO and CIO of Defiance ETFs. We are just a few moments away of going to the Senate Intelligence Committee as they will be questioning Tulsi Gabbard, who is the nominee to be the Director of National Intelligence. Currently, the Vice Chairman, Senator Mark Warner, is giving a statement. We're going to bring you the Q&A portion of that. Let's get an update on what to look out for with Henrietta Treyes, Managing Partner and Director of Economic Policy. Henrietta, can you just give us some perspective on what you're going to be watching over the next hour when it comes to this hearing?
Well, I think there's a lot of questions about which of the Trump nominees that have come up so far are the ones that are be most imperiled. And I would say Tulsi Gabbard is absolutely foremost among them. If you watched Howard Lutnick's Commerce Committee hearing yesterday, that went very smoothly. He should have a pretty wide array of support from Democrats and Republicans. The RFK Jr. committee hearing yesterday was much more contentious, but very much expect him to get through with J.D. Vance potentially breaking a tie, depending on where Senator Cassidy lands. But this is the one where there is the most amount of procedural behind-the-scenes stuff happening to try to mitigate any fallout that could expand beyond what we saw for some of the other controversial nominees like Hegseth earlier. So I think the behind the scenes stuff is really where we should be watching to see whether any of these core senators are going to buck the president on this one.
So to date, Henrietta, has it surprised you at all about how the support from Republicans for the Trump nominees, is this going as according to plan, or is it surprising you in any way?
Honestly, it's going a little better than I anticipated, and I don't want to just take a negative tact here, except a big reason for the nominations process going so smoothly is that the reconciliation process around the tax bill is an absolute train wreck over on the House side and on the Senate side, where they do not even have a path forward on reconciliation yet. So when we're going into the March 4th State of the Union address, one of the things that we need to be mindful of here is that the president may not have any legislative achievement to point to on the tax front. Maybe we're still looking at what to do with tariffs, though we're expected to get an announcement on that on Saturday, February 1st. But the biggest issue is really what's going on with the nominees. And those are the one thing that I think the senators can actually guarantee, where the legislative stuff they cannot.
When we talk about the senators, which ones are you watching today with the Gabbard nomination?
The big ones that you want to monitor are the efforts of the two that have already signaled their material dissent to a couple of different nominees. So that's Senators Murkowski and Collins. I think most notably also Mitch McConnell, Republican from Kentucky, who was previously the majority leader of this party, who went against the Hegseth nomination. Senator Cassidy from Louisiana, who is up for a really tough primary race in 2026 in his race, and I think is going to maybe want to vote against RFK Jr., particularly since he is a doctor and he has strenuous disagreements with RFK's strategy on vaccines and vaccination. But there are at least those four, and then others. John Curtis is another interesting member to be watching. So there's a lot of them.
So, Henrietta, is there a risk here that Tulsi Gabbard does not get approved?
Yeah, absolutely. When you're talking about moving a nominee through the committee without a formal committee vote, that signals that we're more in the process, backroom negotiations, as I mentioned at the outset. I think Senator Thune, the majority leader, is really trying to get Tulsi Gabbard confirmed, again, because there's not a lot of legislative forward progress that they can talk on. But if you're going to skip over the committee, then what you're basically implying is that the Committee of Jurisdiction does not have confidence in this nominee, and it really is just going to be a fealty vote for the president that you're going to need the rest of the conference to carry. Obviously, no Democrats are going to vote for it. I just listed 4 Republican senators. I think there's a lot of additional members who do not want Tulsi Gabbard there and have a lot of concerns about her views on foreign affairs domestically and internationally.
Yeah, so give us some perspective. Like, what are the issues for those of us that don't live and breathe D.C.? Like, what are the problems?
Yeah, I mean, probably some of the most controversial at this point are her relationships with Syria, some of the ways that she's been outspoken on sort of right-wing media about surveillance, whether or not they, a big, huge deal that's raised in the last 48 hours is how much oversight Congress is going to have over these cabinet officials and these federal agencies for whom they appropriate funds. But the president and his OMB director, Russ Vought, who has not yet also been confirmed yet, are going to have to try to exercise extra Congress authority, sort of superseding what Congress has authorized, where funding is going to go across hiring freezes, spending freezes, especially on foreign policy. We've seen Marco Rubio, the defense secretary, have to weigh in on that. The Secretary of State, excuse me. There's a lot of those kinds of components that are just freshly coming before the committee, and I'm expecting to see a lot of the Democrats continue to hammer that home as they did yesterday with RFK Jr. and Howard Lutnick.
So what can we take away here? I mean, if I'm a Republican senator or congressperson, how do I think about President Trump and his strength and his ability to really impact me and my tenure it still seems like Trump is extraordinarily powerful, even though one could argue he's a lame duck president.
Yeah, I think this is really interesting. So I would say a week ago, we were at sort of peak kumbaya for the Republican Party and their fealty towards Trump, and following what he said, you saw that with some of the nominees that went through. I would say Hegseth is a perfect example. But behind the scenes, you're seeing this incredible rupture occur. Most recently today on the House side with the Republican conference. We all know that they were in Doral, Florida until yesterday at their annual retreat. The president was present for that. J.D. Vance was present for that. And they were at the president's resort. However, there were 60 members of the House Republican Conference who did not show up for that event. And the Republican Study Committee, which is about 130, 180 members of the House, came out today with a document saying we will only support reconciliation instructions if it reduces the deficit. So what we're about to see after these nominations is really the serious problems underpinning a one-seat majority in the House and 53 votes in the United States Senate. The real problems are going to come when we start to write the technicals of a tax bill, when we start to see the implementation of tariffs, when these deportations start to pick up and start impacting home construction and agriculture industries. That's what's coming our way. And I think the nominations is really just the bare minimum, the beginning, barely scratching the surface of what's about to come our way.
We're speaking with Henrietta Trace of Veda Partners. Let's just do a reset here. So we are waiting for Tulsi Gabbard of Hawaii to speak in front of the Senate Intelligence Committee for her confirmation hearing. Currently, former Senator from North Carolina, Richard Burr, is giving an introduction to her. We'll bring you the Q&A as that crosses. Henrietta, you guys also just launched your odds tracker on tons of issues. Can you just walk us through, you talked a little bit about the reconciliation effort. Can you talk us through others that you have in this chart?
Yeah, absolutely. I thank you for bringing it up. I mean, investors are under a deluge of a new president and a lot of a legislative agenda impacting trillions of dollars in spending. So I try to put it into a really digestible chart with just our odds as they move from week to week or month to month, depending on what we're hearing from different sources. So on the reconciliation front, first and foremost, I'm at 75% that we get 2 bills, not just one. That's probably the biggest question right now because the $5 trillion tax bill, in my opinion, is going to take all year to write. And I'm expecting that to pass no earlier than the fourth quarter of 2025, realistically, the last week of December that they're in session. So a 2-bill reconciliation effort, again, with 75% odds is where I'm at. And that means that the Senate is going to move forward first with a bill that's going to be focused on energy, authorizing permitting, leases, things along those lines, repealing some of the electric vehicle support components and grants that have gone out from the Biden administration, and then a slew of military spending and immigration spending. That bill, in my estimation, is now going to be a minimum of $300 billion. $500 billion is distinctly possible, and the high end I'm willing to put on it is about $700 billion. If you're going to unlock reconciliation authority, the juice had better be worth the squeeze. So this is going to be a very big spending bill. There's a lot of opinion on the street that DOGE is going to come in and cut federal spending, or Republicans out there in control are going to cut federal spending. That is exactly the opposite of what we're forecasting. Not only do you need 10 Democratic votes for any legislation to pass in the Senate realistically to keep the government open, but you're also going to need somewhere between 50 and 150 House Democrats to vote for any bill just to keep the lights on. So that, coupled with a $300 to $500 billion spending bill on military and immigration, is what we're expecting in the first half of this year. Those are some of the key components. Happy to get into the tax piece of the debt ceiling, which we also have odds trackers on.
I mean, how are we going to, or how are the Republicans going to pitch it to the American public about how you pay for these things here?
The pitching, yeah, I mean, I love the word pitching because that's exactly what's happening. So we're going to pitch the tariffs are going to pay for this. We're pitching the DOGE is going to identify $2.5 trillion worth of spending sometime in 2026, which is obviously a year and a half from now. We are pitching that the OMB is going to freeze spending and federal workers are going to be fired en masse. That is not occurring. So a lot of this is pitch and not a lot of deliverable. When you look at what we've seen from the House appropriators, from the various committees, from Ways and Means to Energy and Commerce, the spending does not have the votes to pass. So if you're talking about cutting Medicaid, cutting Medicare, cutting TANF or SNAP food assistance programs, temporary assistance for needy families, the votes for that just do not exist. So the proposals coming out sound good. They're being pitched. They cover the numbers that you need, but the hard and fast votes to actually get it done do not exist in the House Republican Conference. And you obviously will not get Democrats to support a bill that tries to pass via reconciliation.
And to that point, then what do you think that investors are getting most wrong right now, based on like your odd tracker, your in-depth knowledge of DC?
I think any estimation that federal spending is going to come down is way off. That's just a math problem. Again, 53 votes in the Senate and 218 in the House is not going to get you federal spending cuts. Another piece here that I think might be overblown is the potential for no taxes on tips or no taxes on Social Security. I would touch on that one more than others because Social Security famously cannot be adjusted via reconciliation, and you will not be getting 60 votes in the United States Senate for any changes to Social Security. The president's proposal to stop taxation of Social Security will pull forward the insolvency date of Social Security by 2 years and cost over $1 trillion. So the jawboning we see around those tax proposals is not realistic.
Just extraordinary. I can't imagine how this is going to play out. Henrietta Tres, thank you so much for trying to explain this to us. Henrietta Tres, she's a managing partner, director of economic policy at Veda Partners, absolutely has wired Washington, D.C., completely wired about what Congress is doing, what all the committees are doing, explaining how things are going to go. Again, check out her research because she really puts some numbers on it, like, is this thing going to pass? Is it not going to pass? And what you need to know. So it's great stuff. We appreciate getting your time. All right, let's get a little bit of a reset here. We're waiting for to go down to Washington, D.C. for those hearings. In the meantime, let's get a reset here with John Tucker and a Bloomberg Business Flash.
Will the likes of Alex Steele continue powering the U.S. economy? Shop till you drop.
I'm on a budget.
The U.S. economy, you lie, grew at a 2.3% annualized rate in the fourth quarter, and it all was driven by strong consumer demand. Well, a lot of it. I'll pin the rise in the major stock averages right now on this economic report. Actually, we've turned mixed. The NASDAQ right now dead flat. Dow Jones Industrial Average up 60 points. That is a rise of 0.1%. The S&P 500 right now 8 points higher. That is a rise of 0.1%. So this pretty much bodes well for corporate America. Some of the big tech names leading the gains, Tesla, Meta Platforms climbing. They had upbeat outlooks. And then you have United Parcel Service sinking 16%, disappointing revenue forecast. S&P 500 up 7, the Dow up 63, the NASDAQ 100 right now kind of flattish, up just 3 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. Alex Steele here, Paul Sweeney. We also have the UPS CEO on TV at 3:30.
Oh.
So tough tape, right? In tough day.
Usually they'll come around and do a little victory lap after a good quarter, but it's somewhat unusual after a tough quarter where, again, your stock is getting clobbered.
I even asked the PR, I'm like, so what are you guys going to say about the stock drop here? Like, that's definitely something. Okay, we are also paying attention to what's happening in D.C. Currently, Iowa Senator Joni Ernst is giving the second introduction for Tulsi Gabbard. She, of course, is facing the Senate Intelligence Committee. She is up for Director of National Intelligence. We will bring you that Q&A when it crosses. This is Bloomberg Intelligence. Happy Thursday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock average is higher right now to little change, I'm going to say. The U.S. economy expanding at a pretty strong pace at the end of last year. Consumer spending, that actually comprises the largest share of economic activity. That expanded at a pace of 4.2%. Not too shabby. Yet upbeat outlooks from heavyweights like Tesla, Meta Platforms, and IBM as well. Traders now eagerly awaiting Apple's results. That comes after the close of regular trading today. While the majority of companies so far reporting have exceeded Wall Street expectations, we did have some disappointing forecasts. They've been met with some sell-offs. This includes Microsoft. Shares of Microsoft right now down close to 6%. And then you had United Parcel Service, that one of the standouts right now. They are down, let me see, those are down, well, they're down a lot, I'm going to say. Caterpillar warning that revenues will
16%.
How much?
Like 16%.
16%. I got to get new glasses. Caterpillar warning that revenues will be slightly lower this year. Demand concerns weighing on the outlook for the heavy equipment maker. And Caterpillar shares, I can actually see these down 3.3%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Always good to have an extra pair of eyes.
Well, sure, but we're pretending like it's me when I clearly don't listen to everything you say. So you could be talking about a totally different
So
stock.
it's like a typical man and woman.
Yep. I'm sorry, what'd you say? Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. Just a heads up, we are waiting to take Tulsi Gabbard of Hawaii at her Senate Intelligence Committee hearing, of course, to be Director of National Intelligence. She's currently reading her statement. We're going to bring you the Q&A portion of that. We're also waiting President Trump speaking about the plane crashes last night. That should come up around 11. We will also bring that to you. Nevertheless, let's get to the market here. So one of the most interesting stock moves I think I've seen is Tesla. That stock is up 1.6%, despite numbers that were not great. And any quality beat was a light quality beat. Like it wasn't a good quarter, yet Elon Musk jawboned that stock up on the call. Steve Mann is Bloomberg Intelligence Global Autos and Industrials Research Analyst, and he joins us now. I don't get it. I do not understand what the takeaway is from Tesla's earnings.
Yeah, I think, the volatility that you're seeing in the stock this morning, I think there's been a lot of noise in the marketplace, a lot of focus on the past. But as you know, the valuation of this company is really driven by AI and robotaxi. And I think, Elon Musk basically backed up the truck and unloaded a lot of positive news about AI and about their future last night. They're rolling out the robotaxi in June. We thought it would be 2 years away, but it's going to happen in June, starting in Austin, Texas, and California, and expanding it to the rest of a major part of the country into 2026. The other thing that was a surprise was the Optimus humanoid robot. Now, we didn't think that they're going to start production of that robot anytime soon, but the plan is to do that later this year. And one of the things that they're going to use that for is really to help them cut costs in their production plans.
Steve, could you explain the business model for the robotaxi?
Yeah, initially what they want to do is mimic what Waymo is doing. So they're going to produce robotaxis, and they're going to be for hire. The revenues will be generated and will go straight to Tesla. And then down the road, they're going to open up to current Tesla vehicle owners. And the plan is to do it like an Airbnb style, where the owner actually can rent out those vehicles.
When we talk about the quality of any kind of beat, what was circulating in my world was the greenhouse gas emissions credits, and that was a big reason why we saw the beat for Tesla. But that's easy to strip out. Like at some point that goes away, it gets less, we don't need it. So what do you make of that?
They've always been getting credits, so it's not anything new. But what really drove the lower margins in the fourth quarter is really the relaunch of the Model Y Juniper, the update of the Model Y. They're actually clearing out the inventory of the old Model Y. They did that in the fourth quarter. You're gonna see some of that in the first quarter. So first quarter margins will be a little bit bumpy, but they're increasing incentives, better deals on leasing just to clear out that inventory. But what we're hearing so far is, anecdotally, I think on a global level, China and the U.S., there's been a high demand or a high order rate interest in the new Model Y. So we are positive, and we are more bullish on that new product for next year and the year after.
What is the AI play for Tesla stock?
Well, look, if we step back a little bit, they're actually in a transition into a razor blade type of business model, right? I think they've sold a lot of vehicles. They've been cutting costs on building cars so they can sell more and more of these vehicles. But the real revenue and profit generator is the AI, is the robo-taxi. It's the full self-driving platform. And we heard it last night from the company. They're going to roll out robo-taxi, and it's sooner than I think a lot of people were expecting.
How much of it do you think is the stock movement related to Musk's relationship with President Trump in D.C. versus underlying fundamentals? I realize that might be an unfair question to ask a stock analyst, but just in terms of how you model the relative value.
A lot, because I think it goes hand in hand, part of this. One of the things that, again, the valuation of the stock is really on AI, is really on pushing out the robo-taxi. And, now with Musk being, closer to the administration, the thinking is that, the government's going to actually deregulate or make it easier for Tesla and their rivals to actually roll out even more robo-taxis in the country.
So let's go back to the old car business. Any metrics there that stood out to you about
cars? What?
Actually, yeah, exactly. I hate to answer the question, but I asked the question.
Actually, there is. I think the market is not picking this up, is not fully digesting this piece of news. Is that they actually once they roll out the Model Y, once they roll out the new cheaper vehicle this year, hoping to drive higher volume, their fixed cost is going to drop significantly. They just told us last night that using its existing line without new capex, they're going to able to actually produce 33 to 35% more vehicles. So they don't have to use that. They can actually conserve that cash and spend it on AI.
We're just not there yet, basically.
We're not there. I think that when the volume comes up, increases from the new models, then we'll see the benefit of that rationalization of their line and the reduction of capex.
How close are we to getting that cheaper model that Paul wants to buy?
So far, it's still on schedule for the first half of this year.
First half of this year. Do we believe that timeline? Okay, let me ask a different question.
I mean, we haven't seen. The thing is, we haven't seen any pictures of it.
Yeah.
And I mean, that's how Tesla's been doing. Like, for example, the launch of the new Model Y, the redesign of Model Y, they really didn't show any pictures of it until really the last minute. And they've been talking about it. They reiterated that last night. So my thinking is that they will.
What's the thinking these days, Steve, in the marketplace among investors, maybe even among Tesla, about the demand curve for EVs? Where kind of are we? Are we in momentum of the demand? What's the thinking out there?
Yeah, there's a big debate. I think we're on the camp of that if the $7,500 tax credit in the U.S. is eliminated, there's still going to be demand for EVs. I think EVs are here to stay. There's still going to be demand for EVs, but it's going to hurt some of the competitors that are not profitable in making EVs. So it may lead to example like Ford, basically exiting the EV market, and we might see some of the rivals do the same thing. For example, Volkswagen is actually not launching any more new EV vehicles in North America. So if that's the case, there's potential that Tesla could gain more market share.
Now that we've gone through a bunch of earnings for the automakers, GM in particular sort of highlighted the risk of tariffs on Canada and Mexico. Who do you think is best positioned in the car world to weather a tariff storm?
I think for the U.S. automakers, any U.S. automakers that are more vertically integrated in the U.S. will actually benefit. Look, it's going to hurt everybody. Tesla is not immune to it, but it's all relative. I think, right now, Tesla doesn't build any vehicles in Mexico or in Canada. But, the big three do. They do a lot of it in Mexico.
All right, Steve, thanks so much. Appreciate that. Steve Mann, auto analyst, Bloomberg Intelligence, talk about the Tesla earnings. Let's go down to Washington, D.C. The U.S. Senate Select Committee for Intelligence hearings for Tulsi Gabbard of Hawaii to be Director of National Intelligence. Questioning right now is Tom Cotton, the chairman from the senator from the state of Arkansas. Let's listen.
If any question, as Senator Risch alluded to, begins to approach the line of classified material, my crack staff will advise me, and I will ask you to hold the question until we get to a closed setting.
Mr. Chairman, can I just inquire? I was under the understanding that if in the open round, because this is the only time the American people will be able to see this judgment, you'd agreed if certain members needed to ask a second round of questions in the public setting, that would be.
As is our custom, if a member waits until the end of the opening round and has a follow-up question, then we will permit that follow-up question.
Thank you, Mr. Chairman.
Ms. Gabbard, if confirmed, you'll be entrusted with our nation's most important secrets. We're all entrusted with that information to serve the American people and to keep our country safe. Unfortunately, as you said in your opening statement, we've seen too many instances in recent years of people who were trusted with classified information and went on to abuse and politicize that trust. For example, in October 2020, more than 50 former intelligence officers, many of whom still held a top secret clearance, wrote a letter invoking their credentials to make false claims about Hunter Biden's laptop, but likely being Russian disinformation. Do you agree that this was an example of intelligence professionals abusing and politicizing their past positions and credentials?
Yes, Mr. Chairman, I do, and it is an example of what needs to end and why the American people elected President Trump to bring about those necessary reforms.
Thank you. Will you commit that no one who abuses his past position and credentials in this fashion will hold a security clearance in the future?
Yes.
Thank you. Now, I want to be fair to my Democratic colleagues. Such abuses aren't just a problem on the left. Also in 2020, President Trump's former National Security Advisor, John Bolton, published a book in which he revealed sensitive conversations with the president on national security matters, including highly classified information. He didn't submit this book for review and approval to ensure that our national security secrets were protected. Do you agree that John Bolton's actions likewise undermined public trust?
Yes, Mr. Chairman.
Will you commit that no one who so abuses his past position and risks the exposure of classified information by publishing a book without submitting it for review and getting approval before publication will hold a security clearance again or be trusted with classified information again?
Yes.
Thank you. Let's move on to the topic of ODNI reform that I mentioned in my opening statement. Congress originally envisioned the ODNI to be a small coordinating agency that directs, rather than replicates, the now 18 constituent agencies that make up our intelligence community. Over the years, however, the ODNI has strayed from this vision to an organization that now publicly boasts nearly 2,000 people, more than half of whom are not detailed from an intelligence agency, but rather are career ODNI bureaucrats. They've even developed centers that are producing their own analysis. Will you commit today to working with this committee to restoring the ODNI to its original size, scope, and function?
Yes, Senator, I look forward to working with you and the committee as I, if confirmed, assess the current status of who is working in the ODNI and the function that they fulfill to make sure of its effectiveness and elimination of redundancies and bloating.
Thank you. Do you support some of the policy proposals I mentioned in my opening statement about capping the size of the ODNI, eliminating ODNI taxes, returning employees back to their home agencies to do real intelligence work?
Yes, Senator, I look forward to working with you as we assess where the ODNI needs to be in order to fulfill its core mission and function.
Thank you. And in your preparation for this hearing and this important responsibility, have you developed any thoughts that explains the mission creep and the empire building that we've seen at the ODNI in recent years?
Yes, Senator, I've had the opportunity to review the history of the ODNI, to speak to Ambassador Negroponte, the first Director of National Intelligence, as well as others who have served in this position. I think there are a number of contributing factors to the creation of centers, or not centers, but offices like the recently eliminated Office of DEI within ODNI, and other areas where I need to go in and assess the replication and the duplication of responsibilities that exist elsewhere and some of the other intelligence elements that ODNI has oversight over.
Thank you. Colleagues, I will lead by example and yield back 1 minute of my time and recognize the Vice Chair.
Well, thank you, Mr. Chairman. That is a first. Ms. Gabbard,
now speaking is Mark Warner, Democrat from
I
Virginia.
salute your service to our country. But I have serious doubts about your judgment. And those are some of the areas that I want to pursue. First, until you were nominated by the president to be the DNI, you consistently praised the actions of Edward Snowden. Some who, I believe, jeopardized the security of our nation, and then, in an effort to flaunt that, fled to Russia. You even called Edward Snowden, and I quote here, a brave whistleblower. Every member of this committee supports the rights of legal whistleblowers. But Edward Snowden isn't a whistleblower. And in this case, I'm a lot closer to the chairman's words, where he said Snowden is, quote,